All right. I think I'm live with terrible lighting yet again. This is my last live. Let me see if I can, rather than move the computer. This is my last live from Costa Rica. Next Sunday, I'm flying home. So I won't be doing a live event next Sunday. So next week I'm off, and then we'll do one the following week. I still haven't got my confirmation from YouTube that I'm live yet. Usually it's there. It is. It's right away. So yeah, next week I will be flying home on Sunday. I'll be putting the market outlook up on Saturday night. All right, let's begin some questions here. Sold $100 puts for the 20th of October. You mean the 18th? On TLT for 250 a couple weeks ago. After the Friday, the price jumped to 450 on the 100 puts. Also added the 96. For the 20th November expiration, my question is, how can I manage the loss from the $100 puts from this point? Well, it's not a loss yet. You got 250 TLT. Let's have a look here. Finished at 95.69. They'll be put to you at 100, which is 97.50. So you're not down $2. You're down $1.81. There's still some time value. Typically, you would roll your options. You'd roll them to the next month, and then you'd usually pick up some premium. So if we look at TLT right now, market is closed, but I have the closing prices on the options, and we look at what are we looking for? October. Let's look at the hundreds. The hundreds are 445. So let's do a strategy builder here. Let's say you buy the hundreds and we go to November and we sell the hundreds. You get a pickup of almost 50 cents. So you just roll them forward to November. You'll book a realized loss on the October puts, but you'll have the November puts with a pickup of 50 cents. Even though you're selling the Novembers for about 485, your real premium's only $3 because you already got 250. So your real premium now is $3, and then you wait. And if you got to roll from November to December, you might pick up another 50 cents, and your real premium then will be $3.50. At some point, you'll make your money. Right? So you just roll them and you can pick up some premium at the same time if you don't want them put to you. That's what I would do. When you look at several companies in the same sector, what key criteria do you use to pick the company you will invest in? Well, it depends on what I'm looking for. Usually I look for size. So when I looked at copper mining, I looked for size. Freeport seemed to be the natural. Let me see if I can push this out a bit. No, I can't because the cable is stuck into the wall. Freeport seemed to be the natural one. And I look for a good story. So I look for size, and from size, I look for a good story. Size, you're usually getting value. You're getting some component of value, which allows me to sleep at night. The question is, are you getting some growth with that as well? With copper mining, the growth is in the price of the copper. So yeah, Freeport has done very well since I've started playing with it, and I have options, so I can play in and around the options. If there isn't size, if they're all smaller companies, I look for one with a good story. It doesn't necessarily have to have the best fundamentals. AT&T didn't have good fundamentals when I picked up on it, and it's up $16 to $22 in a period of 6 months. When I first went into the home builders, interest rates were still going up, and I got a question: why would you Why would you go into home builders now when rates are going up? And they're up, many of them up over 100% since I started playing with them. I've long been out of most home builders because they just kept going and going and going, and you get to a point where it's like, wow, I didn't expect it to happen so quickly. So sometimes the fundamentals aren't there, but you think they will be. So picking a sector is about, are the conditions right, or will the conditions be right in the market for that sector to perform well? Number one. Number two, is it all priced in? So some sectors you go in and you think, this is a winner. This sector is going to do well. It's got great growth. You go in and all the stocks are priced to perfection. In other words, all the hope is already in the price of the stock. So let me see if I can change this angle here. I'm doing the Understanding Cybersecurity video. And this industry is poised for fantastic growth from a lot of different sources. So it looks exciting. So you start looking at the stocks, and many of them are unprofitable, but 20, $30 billion valuations on unprofitable stocks. So we look at Zscaler, for example, right in their 10K, they tell you we're losing money every year, and we have no visibility at all. We have no anticipation that we're going to be profitable for the foreseeable future. And they're telling you we're just not going to make any money for the foreseeable future, but their top line growth is incredible, but they're not making any money. Look at Fortinet. They're making money. They're buying back stock, but they're trading at well over 200 times forward earnings. Palo Alto, same thing. The multiple of forward earnings is off the charts. So you look at this industry, you start studying, you start saying, this is big, because with AI, the threats are only going to get smarter and better, right? I mean, AI is not just for the good guys, it's for the bad guys too. But you go into the industry, you look at the companies, and it's all priced in. It's already in the price. So you look at it, you go, wow, you had to have figured this out 5-6 years ago. So number two, after you figure out what industry is going to be good, you go in, you look at the companies. Are any of them has the market figured it out yet? And for many of the industries, the market's figured it out. Utilities, I was surprised that the market didn't figure that out sooner. I mean, that's been a nice winner for the last couple of months. Is big on utilities. What a beautiful winner! I'm only sorry I didn't go in heavier on that. And I think they're going to be a winner for the next decade, just with the sheer build out of assets that need to be done. So it was, that was easy as well. And again, you look for the big player, NextEra. NextEra's been, I don't want to say on fire, because some of these utilities actually cause fires, but NextEra has been doing fantastic. And their last earnings, what did they say? Data centers, killing it with data centers. So that's what I look for. You look for an industry that looks like the conditions going forward are going to be favorable for that particular industry or that particular subsector. I just hate the lighting here. And then you look at the valuation of the companies in that sector. And if it's all priced in, all you can do is walk away. I mean, for cybersecurity, the valuations make Tesla look like a value stock. And Tesla's trading at 80 times forward earnings. It makes Tesla look dirt cheap with the valuations in that sector. It's all in the price. So there is no opportunity there. You look at it, you go, well, a lot of hope is priced into the stock. The problem is you can wake up one day and your screen is red, and you can think, well, is this temporary or is this something more permanent? Because there's a lot of space between hope and reality. And I don't want to ride it all the way down to reality. But if I buy stocks very close to their reality and I wake up one day and the screens are red, I don't have that much downside. And then, you want to diversify as well. It's a long answer to your question, but there isn't just one thing you look at. I have discarded industries simply because they're all priced in, and I'm just not going in. I keep, you move on to the next one. Let's see. What percentage of your overall portfolio do you manage actively? If you mean my entire everything, all assets, add them all in, because I do have private investments in private REITs. You can't touch those. I've got real estate, illiquid, and then I have externally managed funds. If I add it all up in terms of, I'd say 20 to 25%. 20 to 25. Now, that's not counting the valuation of any business I have. That's just leaving the valuations out, because you actively manage your business. So if you count your businesses as an asset, then it would be a higher valuation. What happens if you hold option contracts of a company that goes bankrupt before maturity? They all go to zero. They either, all the puts go to their strike price, and all the calls go to zero. So if you're holding a $20 put, the premium goes to $20. If you're holding a $20 call, the premium goes to zero. So if you were short the put, you're screwed. If you're long the put, you're doing well. It's all a zero-sum game, so everybody's gain is the other person's loss. And then it's over. There really is there's no way out of that. It's pretty much over at that point. How do you focus on growing your business more than growing your portfolio? Have you ever been so distracted by the market that you had to prioritize your investments over your business? Yeah, there are some days where, the screen is, the screens are red. Everything is red and it's moving fast. Well, then, you're going shopping. Like, you're busy that day. You're figuring out what you want to do, what your strategy is for certain things. And usually you have a list. And I have one screen that's a list. That if I have a really red day, I go to that screen. What's on sale? What can I buy? Because I do have cash available. So what's on sale? What can I buy? What do I want to do? So first you assess, well, why are we red? And then you determine whether or not you think, well, is this an event? Is this a trend? Is this the beginning of something? Is this, does this have a 2 to 3 day play out before it's over? These days, when there are sell-offs, it seems you measure the sell-offs in hours. You used to be able to measure them in days, sometimes weeks. These days, it's, if you're selling off, check in an hour. You might be green. Things just last so short. At these levels, at these valuations, with what's going on in the world, there is no hesitation on a 1% pullback to let's commit money to this market. It's an amazing opportunity at these prices, right? So that I can't get my head around, but no, for the most part, I don't stare at the screen. I have a screen on, and then I work, and every now and then I'll look over. Plus, you can set alerts. You can look at, in the morning when you're looking through the news and you're looking at your screens, you can set alerts that if this price gets to here, alert me. You may look at a stock and say, well, if it pulls back to 48.50, I'll put a bid in at 47.75 if it gets there. Well, what if it gets there on news that you don't want to buy at 47.75? Too late. Like, what if something happens in the middle of the day? Some big event happens and there's going to be 300 points of downside that day. Well, maybe you don't want to buy it at 47.75. So setting a bunch of buys, limit buys, doesn't make a lot of sense. Set alarms. Set an alarm, and when the stock gets there, you get a notification that it got there, and you can just look over at your screen. And If you see a lot of lights flashing and things that look like they're moving fast, you could say, whoa, what's going on here? You could check the news feed. You can flip on Bloomberg, put the volume back on, take 5 minutes and see if you can figure out what's going on. But no, to sit there and stare at the screen all day long, what a useless activity that is. Your staring at the screen won't change anything. It won't move any prices. It won't do anything. It won't do anything. And if you have no extra money to commit to the market, what do you care? Why are you even looking? Why are you even looking at the screen? Move on, right? If red does not represent an opportunity for you, move on. If red scares the hell out of you, then you're doing something wrong. I see red, I get happy. I love red days. I ask anybody around me what I do on red days. I'm alive. I'm on top of the world. This is because it's that's where you make money. You don't make money when you sell something. You make it when you buy something. Because if you buy something the wrong way, you'll never make money on it. If you buy it the right way, you're going to make money on it. So I love red days. I love them. But if I were fully invested and I had no cash, red days would be the way I invest. Red days would be nothing for me because, I pick things that I'm pretty sure they're going up. But if let's say I had a small account and I was using leverage and I didn't understand what I was in, and it's a red day, I would be scared because I'd start thinking, oh, this is going to keep going down. And I'd look at the chart and I'd look back over 3 years and I'd see, oh, it was $50 lower. It's going there. And I'd scare myself out of the position. I've seen way too many people do that in my time. They're just fully invested. They have margin and they can't afford. They have to be right. They can't afford any downside. Does that sound like you? If it sounds like you, you're playing this game wrong. You're playing it wrong. You're treating it like a casino. And you can't do that. You will lose. The house always wins in this game. Always wins because there will be red days. There will be red days. All right. If your strategy is such that you have to stare at the screen every day, you're doing this wrong. You're not thinking about this the right way. So no, my business is the business of finance. So while I'm looking at the screens, I am actually still doing something. But no, I probably, if we say 10 hours a day of work, maybe 2 might be spent directly in the market. The first hour of the day it's a coffee and it's a review of what's going on. And I look at things and I line up my day and I think, well, what's going on? What can I do? What do I need to do? What do I want to do? I check every position and I ask myself, do I need to do anything here? Am I good? Good. Am I need to do anything? Good. What about this? You know what? I don't like this position. I don't like this one right now. What do I need to do to make it better? What would make it better in the market? Will I get that if I don't? You move some things this way, you move some things this way, saying, well, I'd like to get something done here today. And then you let the market play out and you get on with your day, right? If the market is taking up all of your time, you better be earning a good living, right? You better be earning a good living because you could be earning a good living. So you better be earning a good living. If you're not, you're wasting your time, man. You can go to McDonald's, let your portfolio, buy an ETF and go work at McDonald's. And at the end of the year, be better off. If that sounds like you, then you're playing this game wrong, right? Having 100K to passively invest in an S&P 500 ETF for a 15-year horizon, do you think it's better going for a lump sum investment or dollar cost averaging? I'm of the belief that you can't time markets. You don't know. I say this many times. You don't know what's going to happen this week. I don't know. Nobody knows. Not even the best of the best know. You might have an inkling. You might say, if this happens and this happens, I think we can go here. But nobody really knows. So how can you dollar cost average into something that you cannot do? The future, it's not that it's hard to know the future. The future is unknowable. It cannot be known. There is no method by which to know the future. It is unknowable. Because it's unknowable, take it out of the equation. If your forecast horizon is 15 years, I guarantee you this, somewhere between now and 15 years, this market will be significantly higher. 50, 60, 70% higher, 100% higher, but this market will be higher sometime between now and the next 15 years. What's the path? I don't know. If we think that this is today and we have a chart where that's the future, it might do this and then fall, or it might drop significantly and rise. It might do this kind of thing on the way to get there. I don't know the path. Nobody knows the path. That's the whole job of timing, is to try to figure out that path. Can't be done. Not outside of luck, right? That's where luck comes in. So just commit the market. Just commit the money to the market, and come back in 15 years, and you will be richer. You mentioned in the past that you keep cash because of the 5% fixed interest rate. Yeah, during the same period, tech stocks rose 50 to 100. Do you think you could have achieved better returns by investing? Is that really your question? Hey, this went up 100%. Do you think you could have done better if you invested in that? Hey, this lottery ticket won 50 million. Do you think you could have won 50 million if you bought me? Are you really asking me that? Would you have done better if you invested in something that went up 100%? Okay, I'll play along. Yeah. But I don't get to play backwards. You don't get to play backwards. You can do that every year. Every year at the end of the year, no matter how good somebody did, you can point out a handful, this group of stocks did better. You can always do that. But we don't get to play backwards. And you can't look at somebody's performance and say, oh, well, Tesla went up this much and Nvidia went up this much. I mean, you could have done that. You have to play the hard right side of the chart. You tell me what's going up 50 to 100% next year. Don't tell me what went up. That's what Kramer does. He comes on at 6 o'clock and he tells you what the market did that day. And you think, wow, he's right. The market did do that. I'd be more impressed if he had a show on at 6 a.m. in the morning and told me what the market would do, because I got to play the future. I can't play the past, right? I got to play the future. Housing stocks went up 100%. AT&T went up 33% in 6 months. That's 66% annualized. There's the 50 to 100%. CapREIT went up 30% in the period of 2 months. Multiply that by 6, that's 180% annualized return. Freeport went up almost 50% in the course of a year. GM went up 50, 60% from what it was as low as 28 last year to, heck, it was a little over 50 a little while ago. Who says I'm not? Who says I don't have these things? Now, the other thing behind this is suggesting that you could have done better if you were in these stocks. You don't know that. It went up, but that does not mean that you would have had the fortitude to stay in it and that you'd still be in it today. You might have taken profit at 20% or 30%. There's no saying that you would have held on to, oh, look, this one was $50, because you get to pick the low point, right? Who says you were going to buy it at the low point, and who says you were going to sell it at the high point? Looking back with that kind of revisionist thinking is suggesting that you would have bought it right at the low point and you would have sold it right at the high point and you would have been up 100%. Have I been in stocks that have gone up 100%? Yeah. But if you look for those, if you swing for the fences all the time, you're going to hit some home runs, but you're going to strike out a lot. Look at all the home run leaders. Look at the leaderboard. Who has the most home runs in their life? Now look at the strikeout board. It's the same group of people. Same group of people. Except with money, you can't afford to strike out that many times. So maybe you'll be in one of these stocks that go up. Maybe you won't. But at the end of the year, I can do that with anybody. No matter, hey, I did 60% this year. Yeah, well, this stock went up 100%. Don't you think you would have done better if you were in that stock? I mean, come on. I mean, that can't be your question, right? I mean, I get what you're saying, is that, do you feel that you gave up some upside by being all in cash? I'll give you an analogy. I have a very strict diet. Now you may point out, but this food is tastier. Yeah, personal choice, man. I have a certain way of investing that is consistent all the time. I consistently make money. Check in with me at the end of every month and look at my portfolio balance at the end of every month. Up, always up, always up. I consistently make money. For me, the market is one big giant money printing machine because I do not treat it like a casino. So I don't know what's going up 50 or 60, 50 or 100%, nor do I look for the ones that are going up 50 to 100%. I look for the earners. I swing for first base. Get on first base. Next runner, get on first base. Next runner, get on first base. The runs will come in on their own. Every now and then you'll hit a double, a triple, a home run. Every now and then you will. But get on base, get on base, get on base. In the span of a year, I played cap read twice from 43 to the mid 50s, sold it, went back down 43 to the mid 50s in the span of a year. That was the second time I ran it up. Now, if you think about the 50% return, I was about a 30% return each time. So there's 60% return in 1 year on a REIT. I didn't have to go chasing something trading at 50, 60 times forward earnings at all. It's a REIT. It's a safe, easy REIT. I can sleep at night. If it goes sideways for a while, I think I get paid to wait and I got the options. And the price is below its reality. So even if there's red one day, I'm going to be okay. There's a good movie out there. I've mentioned this one before when it comes to thinking about the market. It's with Matt Damon. He's a poker player. I forget what it's called. I think it's called Runner. I'm not really sure. I forget what it's called. Anyways, he's looking for the big game. He's looking for the big hand, and he's always looking for the big hand. And there's another character in the movie played by John Turturro, who also is a poker player, professional poker player in the game. But he has a different strategy. He plays to pay the bills. He's got a house. He's got a family. He treats it like a job, like an income. For him, this is not a casino, it's a job. And he tells the Matt Damon character, says, you got to pay your bills. He says, you got to play the smaller tables, the smaller games. You pay your bills. Pay your bills first before you go play in this game. That's the difference between maybe, looking for these 100% gainers in a year versus paying the bills. I've always done, when I first started, I chased momentum as well. You did okay until you didn't do okay. Anybody who's young and who's playing momentum hasn't got the experience to know when momentum is broken, and they keep chasing momentum on the way down. So they usually have a pattern of, I'm making money, I gave it back. I'm making money, I gave it back. I'm making money, I gave it back. And up and down and up and down. And they blow up sometimes and they put more money in saying, no, the mistake I had was I didn't have enough money to stay in. They put more money in, they start making money, then they give it back. You see the pattern? Does that sound like you in any way whatsoever? If it does, you're playing this game wrong. You're playing for the big hand. You got to play to pay the bills. Consistency. Yeah, every now and then you're going to be in a stock that just runs on you, that does very well. Stay with it, right? Let's see. As AI continues to dominate the market, its energy demands are skyrocketing. Yeah. Don't you think nuclear energy, especially investments in uranium supply companies, presents an opportunity? Okay. Let's think about that word opportunity. Have you looked at the valuations of the companies? You are paying for it. It's already there. The gain is already in the price. All you're doing is cashing somebody out so they can get their gain. You got to hope that it goes even higher. It's like the cybersecurity stocks I'm looking at is great industry, great growth. I think there's going to be fantastic growth, but you're going to pay for it. It's all in there. There are no deals. It's super expensive to buy these things. So you've identified an industry. Good. Number two, are the valuations reasonable? Or are you going to pay for it? Are you going to give me $10 million for my house because I say it's a good house? And it is a good house. I got a full commercial gym in the basement, $100,000 gym. I got a pool in the backyard, 10-person hot tub. I got a pavilion with a big outdoor fireplace, a nice big TV above that, full outdoor speaker system. I got a great house. Are you going to, but if it were for $10 million, you'd say, well, it's all priced in. I said, well, in 50 years, it will be worth 10 million. Same thing with these industries is it's all priced in. Have a look at them. There's a difference between a good company and a good investment. Tesla's a good company. I think it's a good company. I think its CEO really means to create an autonomous future. I don't think he's making it up. I think he really means it. I just don't think he can do it. It's a good company. It's just not a good investment. That's the difference between the two. It's just not a good investment. Palo Alto's a good company. Fortinet's good companies. Zscaler are good companies, just not good investments. Unless you really believe that the future is not all priced in, that it's going to be even bigger than the price represents. 200 times forward earnings? No, it should be trading at 800 times forward earnings. Unless you have that mindset, it's not a good investment. Try to separate the two, right? Try to separate good asset from good price. Okay? Price is what you pay, value is what you get. And so you have to ask yourself, well, what value am I getting by paying that price? If you give me $10 million for my home, you're not getting a lot of value. If you give me $1 million for my home, you're getting a ton of value, right? So think about it that way. What is your outlook on the oil market this week? It really depends on Israel at this point. If we think about supply and demand, not good. I think that OPEC Plus has been on the sidelines for a while and given American companies a free pass for a while, but they're coming back. Libyan oil is back as well, and as long as Iranian oil stays on the market, supply and demand, more supply than demand, I think will be the winner. Oxy's mid 54s, sitting a little under 55. Where is oil right now? We got the futures trading. Let's go over to energy. Yeah, it's a little bit negative. That's telling me, I don't even have to look at the news. That's telling me that Israel hasn't done anything to Iran yet. Maybe it's focusing more on Lebanon and hitting proxy sites there. I don't know. It seems to me that oil should be much higher given the risks in the Middle East right now, given the risks with Iran right now, that oil should be much higher. That it's not is telling, right? It was like when copper was sitting around 360, given the world economy and given the Chinese property market being in the doldrums, it should have been much lower, but it wasn't. That was telling. And I was like, this should be 250, but it's not. There's a reason why it's not. Oil should be 90, $100 right now, but it's not. So there's a reason why it's not. That even with this, this is a good enough price. So if this disappears, I don't know that there's much support for oil at the $70 price on West Texas. I think it wouldn't take much to get it into the low 60s. You might even see a 50, maybe even a 40 on this over the course of the next year. I think the upside on Oxy really relies on Warren Buffett right now. Would he be willing to take this company out? Because supply is going to increase. The nice thing is that the companies in the US do have the ability to shut down wells very quickly. That's sort of a nice thing. So if the price goes down, supply will take care of itself. But you'd still have to live through that period of time until the market balanced again. If you are going to be bullish oil, it's geopolitically bullish. You got to be hoping for a takeout of an export terminal. That would do it. That would really do it. I don't know that you get that. I've set up automatic investments into XLK to build a position. I'm in mid-20s. Decided XLK would be more optimal than SP 500. Should I add TLT in? Maybe 80-20. I think right now is a good time to add duration, because here's the one thing I know: rates are coming down. When is the question. The what is not in question. Rates are coming down. Rates are going to keep coming down. We live in a deflationary world. Technology is deflationary. AI is going to be deflationary to the extent that it'll do what it'll do. That'll be deflationary. You have deflation. Tech is just so extremely deflationary. You can't even wrap your head around it. It's not just, it's what it makes cheaper. The only thing that I see tech making more expensive is driving, is vehicles. But other than that, tech is deflationary, and it's not going to stop. And debt is not going to stop going up in advanced countries. So we're going to the zero line. To me, duration is a no-brainer. It's going to happen. I just don't know when, and I have patience. So yeah, I think you should be in some TLT. 20%, I think, doesn't sound bad. I've been concentrating positions, and I wanted this new portfolio to become a nice stable addition that I can use to save as a down payment to a home within the next 5 years. You're saving for a home in the next 5 years. Well, you get to pick and choose. It's not as if you've put a down payment on a home that's going to be built in 12 months and you absolutely need that money. You're saying within the next 5 years, so you get to pick and choose. I think you'll be okay. Study materials for the sector analyst designation be solely based on current content, or a textbook complement will be provided. I've already begun the process of converting them into chapters. I've already begun the process of having them written out. With one person right now, I want to see how that goes, and if that seems to be going well, then I will lean into it. What I could always do is give it to a publisher. I say, look, I have this content, you have writers. I don't want to be in the book writing business. Why don't you do it? Here's my user base. Here's my estimate of how many copies could be sold, but a book publisher is going to want dollars. So you start raising the price of things, right? So I'm trying to see how I can do it in the most accessible, effective way. You get publishers writing these things, you could look at 200, 250 right away on just the book pricing. You're looking at probably another 200 to 300 on an external exam audit, because you need that. You're going to need somebody to do that. Otherwise, what value does it have if you're the one doing it? You're going to need that. I mean, you could get to the point where suddenly an exam is costing $800. You know where I'm going with that? It's like, I don't know. So I'm trying to get them done internally. If I can, they're just part of the normal subscription fee. But if I got to go third party to have them done, it's going to cost, and third parties usually want a per copy royalty on that. Things aren't cheap. Like, having things done, once you start trying to formalize everything, costs go up. Things are not cheap. Now, maybe I'm anchored to a time in my past where I can remember prices of certain things, and maybe that $800 is cheap. Maybe that is cheap in today's numbers. I don't think it is, but maybe it is cheap in today's numbers. Where are we here? I've been concentrating. Okay, I already did that. With all the westernized economies suffering with the debt overhang, and Japan being the canary in the coal mine, everything goes to zero. It's still fiscally loose. How does this end? Well, it doesn't. It doesn't end. It's deficits as far as the eye can see. You look at Canada, you look at US, there is no discussion of a balanced budget on the horizon at all. And these budget deficits are forecasted budget deficits. You look at a couple of hurricanes like the one that just hit the US, you're talking about another 100 billion, 150, and you got a couple more heading towards Florida. You got one heading towards Tampa. How much damage is that going to cause? That's not factored in. You got to start throwing more money in for that. And there'll be more storms. There'll be more because the ocean is measurably warmer. Let's not get into how it's warmer, but it is. The fact is, it is measurably warmer. So the storms are more intensive. That's a fact. You can argue what causes it. You can bring in science, you can bring in counter science, you can bring in conspiracy theories. I don't care. The fact is it's warmer, period. So you're going to get more intensive storms. Well, that's not factored in. All of the disaster relief funds. You get another world crisis and you got to flood the market with more liquidity. You got to spend more. That's not factored in. So no, this is a one-way street right now that Western nations are on. It's a one-way street because of democracy. And not only because of democracy, because citizens, the voters, will not sacrifice their personal happiness for the greater good. They will not. Look, I want stuff. I want free stuff. I'm voting for the party that gives me free stuff. So every election campaign is you get this and you get this and you get this and no tax on tips, no tax for seniors, no tax, no tax. You get more money, 50,000 for businesses, 25,000 if you're going to buy a house. Everybody gets money, right? That's how you get elected. You want to be the leader, you better buy those votes. You're not buying them at the ballot box anymore. You're buying them in the budget. It doesn't end. It doesn't end. It ends at the zero line. Who cares, right? As investors, what the hell do we care? What the hell do we care how we get to hell? The point is, on the way to hell, how do I make money? How do I make sure that when we get to hell, I got a slice of heaven, right? Duration. We're going back to the zero line. Whether the Fed officials may disagree, saying, no, we're not going back there. Once you get to 125%, 130, 140, 150% GDP, 155, with no end to the deficits in sight, you have no choice. You have no choice. You got to retreat. You got to retreat to the zero line. It's going to happen. Unless you fix democracy, unless you somehow change the zeitgeist, the social zeitgeist, such that the electorate is far more concerned about doing the right thing and not doing the popular thing. Those are two different things, right? Ask kids what they want for lunch, it's chocolate bars. That'll be the popular vote, but it's not the right thing to do. The right thing is, vegetables and a good balanced meal. It's boring. They don't want that. High schoolers want fries served in the cafeteria. They don't want broccoli, right? Right thing versus the popular thing. Democracies today is about the popular thing, not the right thing. The right thing is you got to deal with this freaking debt. You got to deal with it. The popular thing is no. Let somebody else deal with it. Take it from them, but give me stuff. You just keep giving me stuff and take it from those people. So I've said this before. I'll say it again. If you have capital in these countries, you don't get to keep that. You're just holding on to it till the government confiscates it from you. And I call it confiscation. They'll call it a higher tax rate to make you pay your fair share. So sick of that word, that 53% somehow is not my fair share yet. It's got to be higher. You don't get to keep the product of your success going forward unless this changes, and it's not going to change. It's not going to change. Is the system not broken? The system is the system. The people are broken. We're broken. We as voters are broken. We have abdicated our responsibility for responsible government. We have given that up. So we can't blame the system. The best system in the world is democratic capitalism. It's the best system in the world, bar none. Period, period, period. Every economy that has adopted democratic capitalism is a rich country. Every economy that has done it. But the people are the ones that are sick. We have the cancer, not the system. We have the cancer. So the system is not producing the right outputs because we as the inputs have the cancer in our brain. We're not doing the right thing anymore. I don't expect that to change. That's one thing I can bet on, right? And as investors, what do we care? What do we really care? As citizens of a country, we care, but as investors, cold rationality. I don't care. What does it mean? It means that we're going to the zero line. Let me position myself so I win. And in positioning myself for duration, if there is a global catastrophe, guess who gets paid first? If the central bank has to flood the market with liquidity, guess who gets paid first? Me. Guess who creates more wealth inequality? The Federal Reserve, the government. Why? Because I'm smart enough to know where to stand. I'm not the one creating the inequality. I just know where to stand. Why Treasury is using short-term bonds as a budget deficit financing mechanism while Fed is fighting inflation. What would it matter? What would it matter what they use? The Treasury has nothing to do with any of this. The Treasury has nothing to do with inflation at all. The Treasury is following orders. It's Congress. The Treasury is just deciding what portfolio of debt they want, what duration on their debt do they want, how do they want to structure the debt. But what would it matter if you issued $1 billion in 3-month notes or $1 billion in 10-year bonds? What would it matter for fighting inflation? I mean, what would it matter? I guess I'm missing the point of, so what? Who cares about the short term? It's bills, actually, not bonds, but I mean, who cares? There is no straight line between issuing money market securities being counter to the Fed's inflation fighting. It doesn't do anything. There was news after the hurricane of the quartz mines in North Carolina being shut down, potentially affecting some semis. Looks like at least one is reopened, but is this single point of failure not a huge risk? A huge risk to what? I guess I'm not following a huge risk to what, though? Is there such a shortage of quartz that it can't be sourced anywhere else? Is it very tight? Is it 2 or 3 key sources of supply and that's it? I didn't hear anything about this, so it can't be significant enough. And I didn't see semis really take much of a hit overall. So if it was a huge risk, I would have heard about it. As I start studying level 1 to write in February, I would like to know which topics are conceptual, which are math. I'm not going to get into that now. I think it's pretty obvious by looking at them. Quantitative analysis has got numbers in it, right? Fixed income, half and half. I think I mean, when you get to the reading, you'll see. I really don't want to go through 82 readings and classify them. I'm CFA'd up to here, by the way. I'm especially, when we go back to level 1. I haven't done any work at level 1 for 3 years. I'm kind of out of touch with what's there. So what do you think the TLT dropped? What do you think the TLT? Okay, well, what do you think TLT dropped that much? TLT is nothing, okay? It has no fundamentals. It has no income statement, no balance sheet. It's not a stock. It is a portfolio of government bonds. Its price is nothing more than a reflection of its net asset value. TLT doesn't move. Bond prices move, and TLT just adjusts to the price of its portfolio. So it's not that TLT dropped, bond prices dropped, yields went up. So why did TLT drop? Because it is a pass-through security of the bonds it holds, and those bonds dropped in value. That's, if you want to know what's going on with TLT, look at the 20 to 30-year segment of the yield curve, and whatever it's doing, TLT's doing the exact same thing. It has no intrinsic value on its own outside of its net asset value. That's it. It has no management premium, nothing like that. It is simply just a portfolio. So if we want to know why something like that, a pass-through security, changes in price, it's because the assets it's holding has changed in price. Oh, wrong mouse. Latest jobs report points to a stronger economy. I don't know that I'd use a stronger economy. Points to a still vibrant economy. I don't know stronger, but still vibrant economy, which will delay the rise on the TLT. What is your holding period? Years? Oh, I got time. This is a winner. I believe the Fed is going to the zero line. I don't know when, but it's going to the zero line. I have no timeline on TLT. I'll sell it when it gets there. In the meantime, it has a yield, and I can use the options. So I can manufacture a double dividend on this, and I'm perfectly fine waiting. I'm not doing anything to my TLT position. I am holding it. I'm perfectly fine holding it. I don't mind that it's down. I look at it being down and say, okay, one last time before we really go. Let me grab more of this. I am perfectly okay with TLT. I'm okay. Understand that. I'm okay. Because I do have a belief that we are going back to the zero line, regardless of what anybody says, regardless of even what the Fed officials say. I don't think they have a choice. I think we're going back to the zero line. I think it's just a matter of time before TLT is going to be back at 150, 160. Give it 2 years, 3 years. In the meantime, I get paid to wait. I'm happy. I'm okay. 29 years old, 5K account. Is it wise for me to do option strategies with defined risk profiles? Well, I don't know that I would put the word, that I would combine these two things. I have this much money. Is it wise for me to do this? That is taking your ability out of the picture. If you have no ability to do this, then it is not wise no matter how much money you have. If you know what you're doing, sure. If you have the right underlyings, sure. So it's not a question of, I only have this much money, can I do this? It's a question of, I only have this much experience, can I do this? That's the more important thing. But defined risk, yeah, you would do defined risk if that's all you have, rather than selling 20 delta puts. But I would not be on one side, all on one side. All on one side means you've bought a bunch of bull spreads and you sold a bunch of put spreads, and that you use your full 5,000, because if the market drops, you lose on all of them. You lose on all of them, right? So be careful. I don't know that I would do much with $5,000. I don't know that I would do much. And at 29, I don't know that I'd do much there. I would hazard a guess that you'd be better off in a year if you put that 5,000 into a broad-based index and you went about your life and you worked and you had a contribution plan where you continually contributed to your portfolio. And then every now and then, when you had a really good feeling about something, you did a spread until you got comfortable with doing those. Given my 5K account, I plan to do bull put spreads for income. I don't mind owning the underlying. If put in the 5K, you can't buy much. Also plan to do bull call spread. Is it diversifying enough? Any thoughts on that? 5K is small. 5K is small. I don't know that I would be doing that. Said the one should be diversified across strategies when doing options. How would you diversify across strategies with only 5K? Make your underlying a portfolio. So if you do it on, let's say, the XLU, well, that's a portfolio of utility stocks. You do it on IWM, it's a portfolio of small cap stocks. Do it on IJR, it's a portfolio of profitable small cap stocks. Do it on IYR, it's a portfolio of REITs. So don't pick a particular stock, pick a portfolio of stocks. Find a sector you think is going to be strong. I think utilities are a safe bet to do income plays on because it's going to benefit from lower rates. It's going to benefit from continued AI, and it's going to benefit from growth in assets. It's going to be hard to knock utilities down. Interest rates went up, or yields went up on the long end of the curve, which should hurt utilities. And Friday, utilities were up. They were up despite that. That's a strong signal that you have a lot of support behind there. When I saw that, I sold even more puts on NEE, NextEra Energy. I was looking at it during the day going, this is a no-brainer. I'm going to sell more puts on. If this is not going to take the utility sector down, if that big move up on the long end of the curve is not taking the utility sector down, what is? I'll take it. Thank you. Right? All right. I use margin to allocate funds to some U.S. positions, mostly following your setup in PM course. Is this being short CAD? You are short CAD, yeah. But that's been working out. How should I hedge against a rising exchange rate as Canadian? I would say that if you have a thought that you are primarily going to be invested in U.S. markets over the next 10, 15, 20 years, which I can't see how you can avoid the U.S. market. The Canadian market just isn't dynamic enough. There isn't the opportunity in the Canadian market that you have in the U.S. market. You're invariably going to be invested in the U.S. What do you care? As you make contributions to your portfolio, you'll cover your short Canadian dollar position and just leave your U.S. dollars in U.S. dollars. And who cares about the change in the exchange rate? You'll make a decision at some point when to repatriate your U.S. dollars. Unless you have a broker that does not allow you to hold multiple currencies in the same account. That means you need interactive brokers. With interactive brokers, you can hold multiple currencies in the same account. If you have one of the big banks and you have one of their trading platforms, you can't. Every time you sell a US dollar stock, they want to convert it back to your currency at an exchange rate, which gives them money every time. That's why they do it. You have no choice but. Even if you sold an American stock and bought an American stock, you still got to do the round trip on the currency, which I think is a ripoff. But if you can hold multiple currencies, do what I do, and what I've done for years is you have U.S. dollars because you're always going to be invested in U.S. stocks, and then you pick and choose when you want to move more Canadian into U.S. and when you want to move Canadian or U.S. back into Canada based on where the exchange rate is. I got the luxury of time because I always need U.S. dollars anyways. Plus, I have the ability to manufacture U.S. dollars. Again, the market for me is one big giant money printing machine. I can manufacture. Give me a bunch of Canadian dollars. Give me a year. I'll have a bunch of U.S. dollars without ever once having exchanged anything. Just by playing the options, I can print money with the options, then use that to get into stocks that are moving. I hold pesos in my account. Not once have I ever exchanged. That was all based on currency trades, where I did not have to exchange anything. I just traded spot. Now I got a whole bunch of pesos. So if I want to go and buy some Mexican stocks, I've already got the pesos. I just manufactured my own currency. What's the difference between investing and speculation? That's a tough one because all investing to some degree is speculation. And all speculation to some degree requires an investment in an asset. It's hard to bring that down to a time frame too. I've seen it brought down. Investing is for the long term, speculation is short term. That's not always true. That's not always true either. I think I would say that investing is done because there is intrinsic value in being an owner of the company that you bought. That you are looking at the company in terms of, I am an owner of this company. Speculation is you're just looking at the stock as a means to get more money. And all you're really looking for is for it to go up. There is no other value that you get out of owning it. I would probably qualify speculation with a few other caveats as well. You don't know what you're investing in. You couldn't tell me what their gross margins are, what their operating margins are, what their products are for the most part. You probably wouldn't understand. You don't know anybody on the management team. You might know the CEO's name, but beyond that, you don't know anybody on the management team. You don't know who's on the board of directors. You don't know what their cash flow from operations are. You don't know what their free cash flow is. In other words, you know nothing about the company, but you're holding shares of it. That tells me that you are really just gambling, because you don't know what you're doing. You're really just gambling at that point. You've taken no time to understand what it is that you're buying. If you heard something somewhere and you just went ahead and traded it, you're gambling, because you don't really know, right? So if I want to know if you're speculating, I'll just start asking you questions about your company. If you can't answer any of them, you think you're investing, but you're probably speculating. You suggest for starting sector analysis, pick a sector you like and start with the biggest company. So you suggest a bottom-up approach instead of top-down. You got to pick a sector. I pick sectors based on a top-down approach. The utility sector was an easy one to pick because all of the conditions are right for the utility sector. It was an easy one to pick. Canadian apartment REITs was an easy one to pick because all the conditions were right for that one. If you like utilities, you got to like copper mining. That was an easy one to pick as well. Well, notice I just said utilities, Canadian REITs, copper mining. I didn't say a single company yet. Now you got to go find a company. So top down determines what sub-industry you're going to be in, then you go bottom up. But if you're going to be an expert at something, you can't be an expert at everything. It takes a lifetime to get there. That if you are going to be serious about this, start with something you like. Start with a sector you like. There's opportunity in every sector. There's opportunity in every sector. So just find something you like and you go from there. You may start with that and end up in a completely different industry because you followed a trail of crumbs to another industry saying, well, I thought I wanted to be here, but since everyone's using this input, this is where I want to be. So you say, I like semiconductors. You start learning about semiconductors. You learn that ASML is really the only supplier of lithography. I mean, that matters. It really has a basic monopoly in the sector. So you might say, no, I want to be in lithography machines. I want to be in ASML. So you may end up there. Synthetic position in a stock is a position in the forward price instead of the spot price. Well, I'd say a synthetic position is a long position in the stock based on a forward price. It's not that it's a position on the forward price. It is a long position in the underlying stock whose price is calculated based on the forward price of the stock. You said that one benefit of using a synthetic is to avoid 30% withholding tax on dividends. Correct. But you don't get the full dividend from the synthetic, right? You get the present value of the continuously compounded dividend if it's an ETF like SPY. The calculation is not going to be based on the dividend itself, because the 500 companies pay dividends all throughout the year. So the calculation would be brutal for that. So it has a dividend yield, and then is calculated on converted to continuously compounded. I wonder if it is anymore. That's a good question. LIBOR was a continuously compounded interbank rate. So if you use the LIBOR rate as your risk-free rate in Black-Scholes, you had to also use a continuously compounded dividend yield. But SOFR, based on the New York Fed's guidance, is multiplicative, not continuously compounded. However, they have guidance for systems that still use continuously compounded rates. It's the difference between using compounded versus simple interest. Since LIBOR was continuously compounded, you always use simple interest. So if you needed the rate for 90 days, you took the rate and you multiplied it by 90 over 360, right? Simple interest. Whereas for SOFR, if you have a 1-year rate, let's say, and you want for 3 months, you took it to the power of 0.25 compounding. It's just on how it's derived. Being that we're using SOFR as the interbank rate, you're probably just using a straight dividend yield. Either way, in the numerator, to calculate it, it's R to the power of, or E to the power, the exponential to the power of RF minus Q, RF being the risk-free rate. So the price of the 50 delta call will have a higher strike price the further out you go, because it will be priced out on the risk-free rate. In other words, the forward price, less the income you get. So if you're calculating out, let's say you had to borrow money to buy something today, how we get to a forward price is, what is it going to cost you to get it to the future? So if it's 1 year, I got to borrow money. What's the interbank rate for 1 year? I got to buy the stock in 1 year. What do I owe? Right? You owe the price of the stock plus how much it costs to borrow that money. You got to pay that back. But if it paid dividends along the way, those dividends are used to pay back part of that loan as you're continuing on, so that the forward price is lower if it has income. So the dividend is in there, and you may say, but the whole dividend isn't in there. No, because you have the cost of carry. It will be higher by the risk-free rate, lower by the dividend. It's in there. In case you think that it's not in the stock, you're wrong. It costs nothing to get into a synthetic. Let's say that I have $100, or let's say I have $1,000, and a stock is $10, and I can buy 1,000 or 100 shares of this stock. That costs me $1,000. That $1,000 is sitting in that stock. It can only earn the dividend. What do I lose? I lose the risk-free rate, because the $1,000 could have been in a T-bill. So I had to take it out of a T-bill and put it into stock. So I give up the risk-free rate, but I get the yield. The synthetic just makes it explicit. You don't have to take your $1,000 out of your T-bill now, because that will act as margin against your position. You create your synthetic, you'll earn the risk-free rate, and you'll earn the dividend, but this is priced out with the risk-free rate. You'll earn the risk-free rate, you'll pay the risk-free rate, they cancel out, you earn the dividend. All the option does is it makes it explicit that you have an opportunity cost, which is the risk-free rate. That's all it's doing. So it's really not punishing you. It's just making explicit that you've got an opportunity cost here, which is the risk-free rate. You could have earned that. The option is just making it explicit. That's all. So it is in there. If there's a dividend, it's in there. For stocks, because we know the dividend is 4 times a year, depending on where your option expires, it'll either have a dividend or not have a dividend. So let's say the Canadian bank stocks pay dividends in September. If you look at the October and November options, they don't have the dividend. But if you go out to December, the put premium is so much higher. Why is it so much higher? Because the dividend is in there. Do you get that? Because it'll pay a dividend and drop by that much. So the put already has that price in there. It's already in the dividend. So it's already in the put. And the call will be lower in that month. You'll wonder, why is the call so cheap? Well, because the stock's going to drop $1 because that's the dividend. So it is in there. Trust me, it's in there. If you want the full dividend, you will need to reinvest the credit into the dividend. No, already explained that. Good. If you knew everything you know now, these questions, these are so hard to answer, right? Where'd it go? I lost it. Give me a second. Oh, there it is. If you knew everything that you know now at 26 and you had 100K, how would you have gone through your life differently? What does having 100K have to do with anything? Like, if I knew everything I knew now, how would I live my life differently, or how would I invest differently? You're saying, how would you live your life differently? What would it matter if I had 100K at 26, knowing what I know now? My God, I would have a different life, that's for sure. Well, I don't know if I would have a different life because I've been very successful. If I went back to 26, knowing what I would know now, I would be very successful sooner. That's all. It would just happen sooner. The fact that you're throwing the 100,000 in, I imagine you must mean, how would I have invested differently? Because how would I have lived my life differently? What would it matter if I had 100,000 or nothing? In fact, I would do this if it were possible, which it isn't, but I think anybody would say this if it were possible. If I could go back 30 years, well, let's say, what you say, 26. If I can go back to 26, but take back everything I know now, but give up everything I've built, give it all up in a heartbeat, because I would have it sooner. Knowing what I know now, I would have it sooner. I don't know. You know what? Now that I think about it, it's like, yeah, but you know what? You know what else would have happened is I would have avoided a lot of mistakes. And I would be a less interesting person today. I'd have less character. I'd have less knowledge. I'd have less wisdom. But you said I get to know everything I know now, so I would have all that knowledge and wisdom. I wouldn't have to make the mistakes to gain it. I'd still be an interesting person. Yeah, okay, I'll take that deal. What I would not agree to is to be 26 again and not know what I know now. I've been there, done that. I'm good. If I can't know it, how do I know I'm not already there? How do I know that I'm not here and that my real self is 90 years old? How do I know that? If I don't know anything, how do you not know that you were 60 and now you're 26 again? See where I'm going? Is that I could just tell you, no. You did go back. You just can't take it with you. I don't know if that answers your question. I would invest differently. Here's what I would do is I would buy a broad-based index and go about my life. Knowing what I know now, I'd just buy a broad-based index and go about my life, because at 26, you'll spend 10 years trying to figure out what your strategy is. And you'll be up and down and up and down and up and down and up and down. And if you're lucky, you'll figure it out. If you're unlucky, you'll gamble the rest of your life, thinking that every day that you make money, I got it figured out now till tomorrow takes it away from you, right? So, yeah. How's your woodworking shop going? It's not. Thoughts on All In podcast. Yeah, I like it. I really wish it'd stay away from politics, though. I don't know if you watched the one with Mark Cuban. I had to turn it off because Dave Sachs and Mark Cuban just kept almost talking over each other. And each one, Sachs was just trying to do the gotcha thing. Wouldn't you admit this? Well, you got to admit that. And just pro-Trump. I get it. You like Trump. I get it. But enough is enough. Like, please stop talking politics. I had to turn it off because they just wouldn't let each other take a turn. It was like, enough. It's increasingly look like a politics circus. Yeah, well, there you go. Yeah. Would expect entrepreneurs such as Sachs, Cuban more thought. I was looking forward for something really great in the venture capital space or in the investment space or in the tech space or what he was working on, but it turned into two people who aren't political analysts, just each backing their own candidate, and each one just. And I think Sachs was just trying for a gotcha moment or a, getting him to admit that, Trump is the best. He's gonna, like, it's just enough. I did turn it off. It got to the point where I said, where I was working, it was just annoying. It's like, okay, I'm done. I didn't even watch it. I really wish it'd stay away from politics. There's no shortage of turning on a channel somewhere and six talking heads all talking over each other about why their candidate is better and the other one is worse. There's no shortage of that. But you've got people with an insight into a part of the economy that we rarely ever see, and they abdicate their role and their responsibility, I think, in staying in their sandbox and telling us about their sandbox. Yeah, this last one was hard to get through. I got halfway. I said, "That's it. I'm done. I'm done." In previous videos that you like listening to Mark Howard, I mean Howard Marks, but not so much Warren Buffett. Why not? Well, because Buffett really doesn't tell me anything. Like, he doesn't tell me. He just tries to come across as really folksy and, I don't get a lot of depth out of him. You get one-liners or little lines that, America's the greatest. Don't ever bet against America, and little lines of this and that. And it's like I never really feel like I'm getting much. It's not intellectual enough for me. But Howard Marks is. Maybe you might consider Guy Spear. Never heard of him. Value investor, author of The Education of a Value Investor. Have you had a home built gym yet? Home gym built yet? Costa Rica house? No, not here. It would be brutally expensive here and very tough to do. When you buy your stocks, do you set a goal position to build up to? Yeah, sometimes, regardless of a slight increase or decrease in the price. Yeah, I buy on the way up. You buy more, or do you just buy once and wait for appreciation? No, I'm willing to buy on the way up. No, like, it depends on how it went up. Most of the time with my style, I get to build a position at a low price, and I like it when I get to do that, and then it can go. Too often I start building a position and the bloody thing runs on me. So you got to get aggressive. So I have been getting more aggressive on things I want. Following your analogy, hammer to the head, go into coma for 2 years. You've got 5 minutes to decide where to put your money. TLT, Canadian banks, Canadian REITs, or XLU. TLT, hands down, it's the purest duration play without a balance sheet, income statement, management, scandals, any of that stuff. TLT. What happens if the economy gets really weak? TLT wins. What happens if the economy is really good? The debt still continues to climb, interest rates come down, TLT wins. No matter what diagram I draw, TLT is in every scenario. TLT wins. TLT, hands down. Hands down. You ever been to South Africa? No, I have not. Rising tensions. The nail biting tension. I don't know why they call them rising tensions right now. We're at nail biting tension level. Plus tariffs in case Trump gets elected. Threat meaningfully TLT return? No. By inflation, expected understanding that rates need to go down. I don't know that last part, but no. Could you please explain how to do a synthetic or risk reversal? Synthetic is buy a call, sell a put, and you try to do it in such a way that you don't pay anything. 30% XLK, 30% SPY, 30% TLT. No, that's just a diversified portfolio. Is it possible with US 30,000 to diversify or do synthetic? It's possible both ways. If I don't want to buy shares directly for tax reasons. For the dividend. I'm thinking for tax. Not going to get around that. For tax reasons? Well, the problem with doing a synthetic is the option that you sell is an immediate capital gain in the month that you sell it. So you want to do them synthetics. You want to do them into the next calendar year. You're going to realize your gains much quicker with a synthetic than you would with an underlying. If you hold those underlyings, all you really have are the dividends, and that yield is small. Overall, the yield is small. XLK is almost nothing. Between 30% SPY, 40% TLT, you might be walking away with 30. Might be walking away with 2.2%, 2.3% on the yield, and then you don't sell your positions. There is no realized capital gains. The dividend is easy to pay tax on. But with synthetics, depending on your regime, once you sell the put, it's an immediate capital gain in the month you sell it. Not in the month it expires, but in the month you sell it. Actively looking for talent. How would one go about applying to be an analyst on your team? Contact me. Tell me what you got, what you can do. We'll give you something to do and see if you can do it. I mean, that's really the only way. People say, I can do this, I can do that. It's like, well, okay, well, let's give it a try. Let me see what you've done, right? I have no problem adding if I'm adding talent. How do you know what to look for KPI wise for a specific sector, sub industry? Well, you got to learn it. I don't know. I'm seeing when it comes to cybersecurity, you cannot be focused on earnings per share or earnings because they're almost non-existent. That you have to judge these companies on some other metric. So you learn, you figure it out. You don't really know until you start learning. That's the deal. So Google's a great help. Google's a fantastic help, a great resource. Just make sure you're getting your information from credible sites, but it's a good resource. Also, how do you know what relative value metric to use for the specific industry? You learn it. You learn it. We're not, born with all this information in our head that we simply just have to discover. If you don't know something, you must learn it. Google is a fantastic tutor. It will guide you to sites which have information, and you start reading, and you'll get frustrated because this is different than this and different than this, and then pretty soon, okay, well, this is the same as this, and this is the same, and now you'll be listening to people, and after a while, everyone's telling the same story, and you've gotten rid of the other stuff, and you'll have an answer. It requires effort. You got to learn it, right? Opinion on Keynesian economics. It's like asking my opinion on gravity. I don't know. You'd have to be more specific than asking me about my opinion on a big whole body of research. Something specific about that. But what's my opinion on it? That would be my opinions. Keynesian, yeah. Sure. What specifically about it? Does irresponsible deficit spending a factor or concern to you in the outlook for duration? Nope, because everyone's doing it. If it was only one person doing it, that's okay. If everyone's doing it, relative, right? Where are you going to put your money in times of fear? Relative. The U.S. is the largest bond market in the world. You can't avoid it. Every index is every benchmark is going to have U.S. bonds in it. If you have active fund managers that have a benchmark, they're going to have U.S. debt. They're going to have to hold U.S. debt. Banks have to hold U.S. debt. There's never going to be a shortage of people to hold U.S. debt, so no, it's not really a concern. Thoughts on the Russia-Ukraine war? Don't really have any thoughts. Do you think that Putin made a mistake in initiating the war? No. There are no mistakes until it's over. Right? What if he wins? It wasn't a mistake. What if he loses? It was a mistake. I mean, until it's over, you don't know if it's a mistake and that there were no substantial reasons for doing. Oh, there were substantial reasons. What is your opinion on that? So let me ask you this. Let's just change the players. My shoelace came untied here. I'm just going to take my shoes off because I cannot sit here with a shoelace untied and focus. I'm neurotic. But if I have my shoes off, what the hell do I care if they're untied? Now, see, problem solved. Let's say that Canada, since they share the North Pole with the USSR, well, USSR, with Russia, if you look at the globe from the top down, you'll see Canada and Russia. They're basically neighbors. Let's say that Canada said to Russia, you can go ahead and set up military bases in Canada. We're okay with that. That's not a problem at all. And Canada was moving closer to Russia and was going to sign a treaty with Russia and some kind of pact with Russia, and had agreed that Russia can set up some missile bases and some military bases in Canada. What do you think the U.S. would have done if that happened? Do you think the U.S. would have just said, oh, I wish you wouldn't do that? No. Russia setting up military bases in Canada, even if Canada were a willing participant, saying, but it's what we want to do, the U.S. would have invaded. The U.S. would never have allowed that to happen. They would have blockaded the thing. They would have owned the North Pole. They would have invaded Canada or quarantined it. They wouldn't have sat around. They wouldn't have sat around. They would have done that. So here's the Ukraine saying, we're going to join NATO. It's the same as Canada saying Russia can put military bases in Canada. Ukraine was saying, well, we can have NATO bases here right on Russia's doorstep. What did you think he was going to do? Like, that's a provocation. You got to have a buffer zone. You got to have some demilitarized zone in there. You got to have a buffer zone. I mean, any little bit of thinking, you would have thought, we're pushing this guy into a corner. He's going to come out, right? If Canada allowed Russia to set up military bases in Canada, the U.S. would never have allowed that. Russia didn't allow it. So was it a mistake? It was probably a mistake to start negotiating NATO with Ukraine. That was probably where the mistake started. What careers in finance do you think are interesting? What are your thoughts on careers like investment banking, private equity, and asset management? Well, those are not entry-level positions in the least. Investment banking, no. Private equity, no. These are not entry-level positions. These are after a career somewhere else. I don't know. I don't know what they're like. I've never had a real job in my life, really, and I am far removed from the job market. I don't know what they're like. Do you implement backtesting in your investment strategies? Not really. You mentioned the shift to large cap capitalism several years ago. Yeah. In line with that, I would anticipate fewer borders, fewer countries, greater consolidation in countries in the future. Would you agree? No, I would not agree. I would not agree. I don't know how you're going from large firm capitalism to fewer countries. I don't know how you're making that move, but no, I would not agree at all. As utilities build assets financed with debt, who cares if it's financed with debt? Their debt equities ratio, who cares? Who cares? Are the way for utilities to keep debt equity ratio constant? Who cares? Wouldn't their credit rating deteriorate? Who cares? Well, first of all, no, but who cares? Who cares? They are regulated. They get their cost of capital. So if they finance everything with debt, they're guaranteed to get that return. There is no default there. Who cares if it's financed with debt? It does not matter for a utility. All utilities have debt. All of them have debt. Now, the regulator will dictate levels of debt and equity that they have to have. So they can't just willy-nilly go crazy on debt. Utilities are known to issue shares. You got to keep that in mind, that they do issue shares, right? But as far as debt, who cares? That's not a concern at all for utilities. Thoughts on palladium and platinum? Could they benefit from gold rally? They have more of a industrial application. Palladium, I think something like 60% of the palladium supply is Russian, something like that. Used mostly in vehicles. Costco has started to sell platinum bars. I don't know if that's going to boost the demand for platinum, but 890 locations around the world with 80-some million people going through them, there's going to be some demand for platinum, I'm sure. But platinum and palladium haven't really come along for the ride here. What do we have? Platinum, $1,000. Palladium, $1,000. Palladium's up $24, 2.4%. Platinum kind of flat. They've been there for a long time. I don't know that there's much excitement there. I see the metals fading away. That's because futures are fading away. Forex. I would love to see the peso weaken just a little bit. Like, give me 1950, 1960 again. I'll go in for a nice big chunk again. I like the peso. Going to be registering and starting studying for May 2025 level 1 this week. Hope I'm not too late. Wow, May. No, you're not too late. Experience with Apple Studio displays. Do you like it so far? Does 5K make a difference? No, it does not, because there's nothing 5K. So no, it does not. I have it side by side with a 4K, and you can't really tell very much. It looks smaller. It looks smaller because it has a very thin border around it, right? So it's almost all screen. So it doesn't have, the wide band around it that the 27-inch Macs have. If you buy the older version where you didn't buy the computer and the monitor separately. So it looks like a smaller monitor, but it's not. It's the same size. As far as visual, I got a 4K beside a 5K. Everything is 4K anyways. I don't think there is anything 5K. Not even on Apple TV is anything 5K. So it's kind of like, overkill. Everywhere is talking about the up and rising of the India market and economy. Would you be looking at capitalizing on this? For me, maybe, through an ETF, but I don't know much about the Indian market other than I think the next decade is its decade. Why do so many financial models have lines for both loan amortization and interest paid? Since amortization includes both principal and interest. No, it doesn't. Isn't interesting being double counted? No, it doesn't. No. An amortization schedule is how the principal declines over time. So if you do a mortgage amortization schedule, you're amortizing, it's how the principal amortizes over time. The interest is on the declining balance. It's, whatever's left over after you pay the principal each time. You need to have an amortization schedule to calculate on the next payment what component of the next payment is interest, what is principal, and only the principal is amortized against the principal payment against the outstanding. So, no. What's your take on the drama teacher giving away $400 million to his liberal? Is there a chance he puts away? And if so, how will you be celebrating? Well, he will be put away. I'm honestly hoping he doesn't resign, that he stays right where he is, because I do want him to lose significantly. It's inevitable that he gets wiped out. Why are you so confident in TLT? Because rates are going down, period. I think I've made that point way too many times, and almost every market outlook I make that point. Do you think about CGI for cybersecurity? Well, there's so many acronyms in that space. What do you mean when you say CGI? Computer generated something? What does that have to do with cybersecurity? Do you mean deep fakes? When I'm looking at the cybersecurity industry, my task is not to solve all the threats. My job is not to produce a video that tells you how to solve all the threats. It's really to tell you that there is something that the big part of the industry is threat management. Threat identification and threat management, and what tools can do it. How is it being done? Where is it being done? What is a 0-day threat? All of that kind of stuff. But as far as solving all the problems, that's in no way am I going to do that, to say, well, here's one problem, here's how you would solve it. I'm just going to say, look, there are known threats and unknown threats, and products, based on zero trust network access and threat identification, threat assessment. They can, you manage known risks, but then there's unknown risks. I'm not going to talk about how to solve them. I don't know how to solve them. I don't have to know how to solve them, right? I don't know how to mine for copper. I just have to understand how other people mine for copper. But when you say, what do I think about that? What is specifically, right? These are big questions. Like if I say, what do you think of space? Oh, well, like what specifically do you mean? What do I think of it? Like it's a big topic. I need, what do you think about this particular thing? What do you think about computers? What do you think about the internet? It's like, well, it's such a big question. Have you always been able to control your emotions when the market moves quickly in one direction or another? For some tips to stop yourself from reacting emotionally during sell-offs. For the most part, I'm not too emotional. Sometimes I get emotional when something just keeps moving against me every single freaking day. Every day. You're looking at going, how much, like, aren't we ever going to take a break here? Sometimes I do get emotional that way. Like, hey, come on, I've never been in a stock like this. Why am I, why am I not in this? But sometimes you're short something and it just goes up 87 days in a row. It's like, I've never been in a stock that's gone up 87 days. Or you're long something and it just goes down 87 days in a row. And you think, I've never been short anything that's gone down like that. It's just sometimes, yeah, I do get emotional when something has just gone on in one direction for too long, too far, and is just no longer makes any sense, right? Then I get upset. So, have you considered Cloudflare? They're smaller. The big ones, the two big ones, are Fortinet and Palo Alto. Those are the two big guys. Cloudflare is smaller than CrowdStrike. Once you start getting into the smaller ones, I think you can learn everything you need to learn from the big players. They have a different product than other companies you have mentioned. They all have a different product. One thing that will jump out at you when you start looking at these companies is they're all number one in what they do. Number one in this, and you read another company, they're number one in that. Well, hang on, I thought they were number one. You go to a third company, number one in this. Hang on, I thought the other two were number one. Everyone's number one. Everyone's number one in everything that they're doing. Everyone's number one. That's one thing I picked up on looking at all these companies is, when they start talking about, you look at their presentation, number one, number one, number one. Like, how can everybody be number one? No one ever says we're number three. We're pretty good. We've been around 6 years. We're number three. No, we're number one. Everyone's number one. And everyone calls their stuff something a little bit different. Once you start tearing apart, you go, okay, well, this is the same thing that they've got over here. And the nice thing about these companies, what I really like about these companies, is they all have really great YouTube channels where they talk about their products. Some talk about it technically, some break it down for you, and they give it to you in simple terms. When they give it to you in simple terms, you go from one channel to the next, and they go, you guys all got the same thing. You guys all really got the same thing, except yours maybe have this little feature, and you do this, but you're all solving the very same problem, and you're all number one. You're all number one. This is amazing. You're all 20 times, 20 times more data than Google, 70% faster than everyone else, 30% cheaper. You're all, I don't know. I know it's not true. I know they're all not number one, but maybe they pay different services to rate them number one on something. I don't know, but they're all, go through all of them in their presentations. They're all number one in what they do. Number one in SASE, next one. Number one in SASE, next one. Number one in SASE. Can't all be number one, man. I learned this in grade school. It's math. Can't all be number one. I watched a recent video from Peter Santinello. He visited the Canadian border and spoke with a sheriff. Seems to be less attention there, but a lot of illegal immigrants are coming from the north. Yes, they are. And they're primarily from India. Primarily from India. And yeah, it is a big issue, is the number of illegal crossings from Canada into the US. 80% of them are Indian. Indian, in case some are still using the old word Indian to mean indigenous. But yeah, it is a big problem. It is a big problem for the US. I imagine it's going to be a big problem for Canada because at some point the eyes are going to turn to the northern border and build a wall and make Canada pay for it, right? What would you look for to get out of your housing stocks? Well, I have. I think you mean REITs, the apartment REITs. I've been trying to get back into them. Thank God they've been selling off a little bit. I can pick up a little bit more. Would you say illegal immigrants are a necessity in countries like the US to occupy hard labor, but much needed jobs? Despite the fact that the right wants to tighten borders, lots of businesses use these. No, I wouldn't say that. Take out the word illegal. Would you say immigrants are a necessity? Yeah. Would you say illegal immigrants are a necessity? No. I wouldn't say illegal immigrants are a necessity. Immigrants are a necessity, but you got to come in the country the right way. You have to. We kind of want to know who you are. I think that's fair. Let's say, and before you start saying, that's been proposed before, that we just ask some questions. Let's say we're asking some questions of somebody at the border, and we say, well, what are your thoughts on women? well, they really shouldn't have any rights. I mean, their place is in the home and they should cover up. What are your thoughts on, race relations? Well, the white-skinned people are the best people in the world and everyone needs to die. Would you let them in your country? I don't think so. I think at that point you say, okay, look, we don't hold those values here at all. You're not going to do well here. You're going to kind of be a problem. You're not going to be successful in this country, and we really don't want you. Yeah, that's why you got to come in. You got to come in legally, because we kind of want to ask you a few questions, right? Coming into the country is a privilege, not your right. It's not a right that, well, I'm a citizen of the planet, it's my right to walk into any country. No, it's not. No, it's not. There are people in this country who have invested in this country, some have died and bled for this country. Some have lost loved ones in the name of this country, that have paid into the system, built up this country, and we have certain values that we like. We have certain freedoms that we like. And if you're going to come in here and you're hostile to our values and hostile to our freedoms, well, what do you want to come in here for anyways? Get out, leave, go, right? I think you'd want to ask some questions. Do you have a criminal record? And you look in and you say, oh, this guy has killed 87 people. Maybe not let him in the country, right? So when you come in illegally, you deny the country the opportunity to say, okay, we're good with you. I don't agree with that. So yeah, you need immigrants, but you don't need illegal immigrants. You want to come in the country, you got to do it legally. I agree with that statement. Republicans in the US are not saying we don't want those people here, even though there's some that say that. There are some in the Democratic Party that say that too. Okay, like, I mean, the idea of racism is not a right-wing disease. Racism is a human disease, not a right-wing disease. There are lefties and there are righties, and there are racists all over the political spectrum. The point that is being made from Republicans is that if you're going to come in the country, you got to do it legally. I absolutely agree with that. It's not as if we're saying we don't want those brown people in our country. They're just saying we don't want you coming in that way. We got places set up for you to come in. Can you please just line up? Line up. I get that you're running away from something, but seriously, we didn't cause that. That's not on us. We're going to do the best we can, but you can't throw your problems at us. Yeah, I think you come in the country legally. Who would disagree with that, right? When you chose Costa Rica, it sounded like it was temporary choice. Will you move at some point? Yep. If so, where's next? U.S. I got bad advice when I moved here, by the way. Very bad advice, because I was just going to grab a condominium in Panama and be done with Costa Rica. But I got bad advice. I was under the impression that to keep residency here, of which I already have, by the way, I've got my residency now, that I had to be here 6 months plus a day. Well, not true. Not true. That's why I bought a big place, because I figured, well, if I'm going to be here that long, I'm going to enjoy myself. 20 days is all you have to be here. 20 days. I didn't need a place this big. So what a disappointment. I would have just bought a condo and be done with it. But I cannot be in any other country more than 6 months plus a day. So the thinking now is, well, I still got Canada, 6 months less a day, and I'm going to buy a condo in Colorado. I'm looking at Telluride for some skiing, right? So a condo in Telluride, they're not cheap. They're not cheap. But you only live once. YOLO. And then I only have to be here 20 days a year. And the place is Airbnb, so that when I'm not here, other people stay here. And it pays my costs for the year. So the place is free to carry. And I only have to be here 20 days a year. So I have a tax shield, I have residency, and I don't have to live here. That was nice. That was nice. I only have to be here 20 days a year. So if you're looking to make sure that your capital stays your capital, Costa Rica is a great place to come and buy a basic condo and hang out here 20 days a year and then just circulate. Did you look at Paraguay when deciding to relocate? Nope. 10% taxes. No, didn't think of Paraguay. What's your long-term view on Intel and Chevron? Chevron, I don't really have an opinion on. Intel, what's interesting about Intel is there's interest, right? Qualcomm showed interest. What was some other company showed interest but got turned away? ARM showed interest but only wanted the jewels, didn't want the other stuff. And Apollo is showing interest. There's interest, which tells me that probably 2022 is probably a good support area for Intel. Good reviews on Lunar Lake, the laptop CPU. Good reviews on that one. But they do have some challenging problems in the foundry business, because you got to give your design to Intel. Now I want you to think about that. They're going to be a foundry for semiconductors, but you must give them your design. Intel, which might be your competitor, you have to give them your design. I think they get rid of the foundry business. Too personal. As one man to another. Ooh, I don't know your daughter, if that's where this is going. Any tips on controlling sexual urges? Is this what was that guy's name again? Who had to be told what to, I forget his name. He was leaving. Sometimes they control me, leading to overindulging. Yeah, it's not my forte. That is not my forte. I can't help you there. Not that I don't understand what you're saying. Just that I have no experience in behavioral psychology in the least, so I'm going to just avoid that. Thoughts on purchasing TMF? I don't know what it is. Levered ETF instead of using TLT? Nope. As soon as you say levered, nope. Do you play sports in your younger years? Were you athletic? Mostly solitary sports. So I did martial arts when I was a teenager. Actually, and I even continued on university, 2 forms of Shaolin, Hungar and Muti. And then I liked downhill skiing. That was fun. But I was never a team player in the, no team sports. What made you choose expiration so far out on your ZB puts? Okay. 2 central bank meetings, I think, was enough. I want an allocation and grab the same strikes, coincidentally, but October 25th. You don't have a central bank meeting to October 25th, so you have sentiment driving yields. Is Costa Rica humid? Less and less so. I'm finding that when I left here, it was raining every freaking day, and yeah, the humidity was showing up, and there were mosquitoes everywhere. Since I've been here in September, I haven't been bitten once. No, I haven't been bitten once. They usually get my legs. They're usually a mess. I haven't been bitten once. The humidity, in the 3 weeks I've been here, well, 2 weeks now, has really died down. It's actually really nice during the day. And the rain, you get it every day, but less and less. So this is the springtime in Costa Rica. We're entering spring, and then summer starts in like December, and then it's just sunny all the way through. There's like no rain. no rain for months, and then rain for months, and then no rain for, it's like Timmins, it's sunny all summer long, and then winter, 8 months, 9 months, and then a little bit of summer. It's about the third week in July, you get summer, and then, so I'm used to 2 seasons. Average annual return for the portfolio managed 20 to 21. Rounders, that's what the movie is called, Rounders. If you guys want to watch a good movie, watch Rounders and relate it to the market. Just think about how he's going about things and the advice he gets from the John Turturro character about you got to pay the bills, and then think about the market that way. Rounders, that's it. What is it that we have to do in order to do what you do with your portfolio? What do we have to do in order to do what you do? I don't know that you would do what I do. Everyone has their own style of what they like to do, what they feel comfortable with, the risk levels that they're comfortable with. I don't know that you would want to do what I do. I think you'd want to find your own style. I think you'd want to find your own target list of stocks, your own types of companies that you like investing in, your own style of analysis. I think you'd want to find your own space. But what to do to play the game? Educate yourself. Seriously educate yourself, and it never ends. It never ends. Have a rule that you will not buy anything you don't understand. Hey, I got a great company for you. This one's going up. And you say, is it? If you can't tell me what their margins are, what their growth rates are, what their strategy is, what their unique proposition is in the industry, if you can't tell me anything about them, don't touch it. How would you adjust your financial modeling when looking at a conglomerate compared to Costco? Some of the parts, more than likely. If you're looking at a conglomerate, well, it would have to start with how much information do I have? Because, some companies, I'm back and got, okay. Somebody had to get in the house, which means they had to jump the wall. But somebody's in the house. Someone's in the house. Well, they're supposed to be in the house, but I got a clicker that opens the gate, and I just got a message that they're in the house, which means they jumped the wall. I'm gonna have to put barbed wire across the top of that wall. Get a couple of Dobermans. That's not gonna happen again. What is it? Okay. Conglomerate, some of the parts, more than likely. And again, it would depend on the amount of information available, right? So being that we as retail investors don't have access to management, we are limited by the information that we have. And it has to be consistent information that we get with each report. Otherwise, we may get a presentation here and there where it gives us a bit more information, and then the next year we don't get these presentations anymore, and we're left, well, how do I complete this now? So it's most of the time is what's in the 10K that I can use, and what is consistent. What kind of information do they consistently give? And for a conglomerate, yeah, I think some of the parts. I'm unable to buy government bonds for 4 or 5 year maturity, trying all combinations till 5K at ask price. Oh, 5K may be small. Order never gets filled. Can only get my hands for less than 1 year. Is it normal? Yeah, sometimes it is. Sometimes that is normal. That it may be too small, but sometimes it's normal. Yeah. After all these years teaching CFA, why didn't you consider taking the exam? Why? But why? Like, I don't know why I would want to. For what? For bragging rights. Let's say that there was a designation, a brand new designation that came out that specialized in REITs, nothing but REITs. And I looked at the content. I go, I know all this stuff. I can teach this easy. Why would I take the exam? Like, why would it be important for me to take the exam on something I already know? For bragging rights? Like, if you look at the CFA content, you look at quant. I've completed a PhD. You want quantitative analysis, undertake a PhD. You'll be quant out. And I mean rigorous shit, not the easy stuff that CFA gives you. I'm talking some rigorous stuff. So you look at the quantitative analysis in a CFA and you say, I know all this stuff. Economics, well, come on. I mean, the financial and reporting analysis. Well, I mean, my first degree minor was accounting. So the only thing that I had never seen before when I started with CFA was their ethics, because it's proprietary to them. And same with GIPS. These are stuff proprietary to CFA, so you're not going to find it in any textbook. Everything else is taken from other textbooks. At least it used to be when the content was good and rigorous. They were chapters from other books. Fixed income across the three levels. Fabozzi was the author of a lot of those readings right out of his textbook. Some of the readings, like almost example by example, right out of his textbook. So I had seen all of this before. I had taken them in different courses before. So if we say, well, why not take the exam? I have. Instead of one exam, it was an exam in fixed income. It was an exam in derivatives. I've taken all of them before. So why do it again? I felt no need to. And candidates who took my subscriptions, I don't think really cared. Can you teach it? I think the test of a teacher is not whether you passed a test, right? Just for someone to say, well, I passed a test, I can teach it. Do you believe that? Do you believe that's all you need to do? No training in any of the assessment requirements, no training in epistemology, no training in assessment, nothing. I passed a test. I passed a test. I got 72%. I should be able to teach it with a B minus, because that's all you need is a B minus. You just need a C plus to pass level 3. If you went to university and you took a graduate course and I said, your instructor got a C plus in this course, would you say, oh, okay, that's not bad, C plus? Or would you say, whoa, wait a second here. What? I think you'd have a problem with that. But to pass level 3, it's equivalent of a C plus. To pass level 1 and 2, it's equivalent of a B minus. If passing a test were the true test of whether you could be a teacher, all of your professors in first year would have been second year students. Because why pay for a PhD if all you need is somebody who passed the course and passed the test? They could be your teacher. Was that true? Would you accept that? Would you have accepted that all your first year professors were second year students because they passed the test? And what if the next year 20% of the content were different? Would that disqualify them from teaching it because you said, well, if you pass the test, you could teach it? But what if the content is different? Are they still qualified to teach it? They didn't take a test on that content. They took a test on some other content. So let's get these CFAs who are in this industry, who got their CFA 20 years ago. The content today is radically different than it was 20 years ago. They didn't pass a test on this stuff. They passed a test on stuff that's no longer taught. Are they still qualified to teach this stuff? If you say passing the test is the bar, are they still qualified to teach this stuff? You'd have to conclude, no, they're not, which would be a ridiculous statement to make. So you must conclude that passing the test has nothing to do with your ability to teach the content, which I think is true. I think what matters more is, have you actually done any of this stuff? Not did you pass a test and then spend 20 years teaching this stuff without ever once being in the real world to any significant degree, or do you actually do this stuff? So let's say that there was a class being taught, and on this side of the hall, there is a very tenured professor with 4 textbooks, 5 textbooks, all bestsellers, teaching it. On the other side of the hallway, pick any big fund manager, stick Howard Marks in there. Howard Marks is in that class teaching it. Which one are you lining up for? The very tenured professor who's very well published and has many textbooks, or Howard Marks? I know what class I'm sitting in. That guy's done it. That guy's done it and he's successful. I'm going in there. I want somebody who is in the industry. I can say this with almost 100% certainty. Of all the CFA instructors out there, I have the most real world experience, bar none, period. I do this every day. I control significant amounts of money every single day. I make big bets. And I'm mostly right. Find me somebody else in the CFA space that can do that. Isn't that more important than passing 3 tests? Besides, show of hands, who thinks I can't pass 3 tests? Goolsby said that increased productivity may lead to higher neutral rate. Yeah, well, it could lead, increased productivity. Hang on, let me try a higher neutral rate. You mean lower neutral rate? This seems to work against your point that tech is deflationary. Lower increased productivity. Oh, okay. I think I know what he's getting at there. Increased productivity. I don't know if he means a higher neutral rate or a higher real rate. Increased productivity could lead to a higher real rate if you keep rates at this level. Most absolutely it will, because higher productivity is deflationary or disinflationary at best. So let's say that you pay your workers 10% more, but they produce 15% more output. Your cost per unit is going down, is actually lower. So that's actually deflationary. So no, I don't know that increased productivity would lead to a higher neutral rate. Lower productivity would, because that would raise unit costs, which would raise prices, which would raise inflation, thereby needing a higher neutral rate such that the slowdown in investment and borrowing would allow supply and demand to be equal. And I think he got that backwards, or maybe you heard him wrong. Maybe he meant real rate, not neutral rate. I think what would cause the neutral rate to be higher is the desensitization to the interest rate through financial sophistication, so that I can lock in my funding costs for 10 years. So you go ahead and change rates, doesn't bother me, doesn't affect me at all. I'm perfectly hedged from interest rates. So if I can perfectly immunize myself from changes in rates, then there is no neutral rate high enough that would change my behavior. That would lead to a higher neutral rate. But I disagree with that one. I disagree with that one 100%. Applied member, where can I find your thesis on Tesla and BCE? Tesla, I've had my thesis out on Tesla for a long time. BCE, a couple of weeks about, you'd have to go through the positions, but I did a 2-screen breakdown of Bell. I did quite a deep dive on Bell on that one. I can't remember what week it was. I think it was either the first or the second positions video that is up, but I did go through Bell extensively. What do you think is better for the U.S. in the long run? Kamala or Trump? How do you think they differ from each other in terms of policy? Well, I mean, almost they're 2 different people. I don't want to get into that. What's better in the long run? I don't think it matters. Does Bush matter today? Does Reagan matter today? Does Clinton matter today? Does Obama matter today? Not really. I don't think it matters in 10 years. I don't know who would be better. That would you could get conditions in the future of which you would want Trump. You could get conditions in the future of which you would not want Trump. So I don't know that you can say which one would be better unless you tell me what the conditions are in the future that we would have, and then I'll tell you which one would be, which policies would have been better. Crowdsource. I think you mean CrowdStrike. CrowdStrike, maybe. Doing level 1 CFA in November. Mock exams are slightly above average, but not in the green. So now I'm worried, given. Do I need to defer? Only you can answer that. Only you can answer that. It depends on your level of comfort. I mean, if you're not feeling comfortable, you still have time. It's October 6th. You got a whole month. Can you lean in, right, and get it done, or do you just feel that you have a tenuous understanding of it? I mean, only you can determine that. Should I quit drinking coffee? I'm dependent on it being able to work. No. I mean, well, are you drinking 20 cups a day? Pull back. But no, I mean, what are your alternatives for caffeine, right? You're not going to go into the colas. That's worse for you. Tea, a black tea would be nice. Try a black tea every now and then. Although it's still caffeine, you know, if it's a $30 a day habit because you keep running to Starbucks, maybe you want to think about it, right? 8 months enough for level 1? Yep. Is it because nobody wants to deal with reality? Is that why politics is being for popularity and not the right thing? Well, I don't know that I would say that people don't want to deal with reality. Reality is what they think it is. So to say that they're not dealing with reality, I think they would push back and say, oh, no, I'm dealing with reality. Your candidate sucks. My candidate's the best. Because their reality is what they know, which is probably being fueled by social media and algorithms that feed them exactly what they want to hear, thereby reinforcing that they're right all along. So I think a large part of the problem is just the sheer amount of misinformation on social media and the echo chamber you end up being in, where the other side is just absolute evil, right? If you listen to people like John Oliver and Colbert, you think, my God, Republicans are just fucking crazy, aren't they? Well, that's because that's part of the left side echo chamber. They take, as John Oliver is the worst at this, he says, take this person, for example. And there's only one example, and it's a bad one, but he puts it out there to be representative of everyone else. If you want misinformation from the left, John Oliver tells a one-sided story almost all the time, in a funny way. So he's kind of a funny guy that way, but he is not good for, if you think Fox News is full of misinformation, so is John Oliver, full of misinformation, telling only the story that makes their side look good and Republicans look bad. Only for them, only progressives and liberals are wonderful people. Everyone else is evil. Everyone else is evil and an idiot and stupid, right? So I think media today is probably, I think the for-profit media is probably one of the biggest enemies to sensible voters. But I think that I think most people would disagree that they're detached from reality. I think that say, no, I'm well in touch with reality. It's just I'm right and you're wrong. And there's not much you can do about that. When you take profits, when do you take profits? I'm up 20% on the 1K invested. I don't know, when I think the run is over. So a good example is Capri. Its net asset value is 55, 56, and as it started getting closer to that, okay, it's time to move out. I don't want something at fair value. I want to steal it. So once it gets to fair value, it's like, okay, well, this is fair. Let somebody else have it now. I'm not satisfied with fair value. I want to steal it. When we are going to hell, but as investors, what's important is how do I make money on our way to hell? Oh, okay, you just quoted me. Do you prefer behavioral economics or macro? So macro gives you the framework of which to think about broad relationships. Behavioral gives you the messiness in between the model and the real world. So models are useful not because they describe the real world, but because they simplify the real world. We don't expect a model to be a reflection of reality. We expect it to be a simplification of reality. But what it gives us is not the exact answer, but it gives us good relationships between variables. The behavioral part finishes it, says, well, here's the model that's a simplification of reality. Here's reality. And behavioral economics kind of just fills that gap that gets us from the model to reality and shows us where things can break down sometimes. So it's not like it's one or the other. It's sort of like saying, which do you prefer, shopping or cooking? Well, they kind of both have to be done, right? You can shop, but you still have to cook. It's not as if, well, I'll cook and that replaces shopping, or I'll shop and it replaces cooking. I got to do it all. So this is sort of, think of macro as shopping and behavioral as, cooking the meal, that last mile and getting it done, or understanding, well, why does it not always work out? Is there some behavioral inefficiency in here? As you get older, do you get more control over your urges? Yeah. How? You just do. Older people seem calm and calculated. Well, let me put it to you like this. When you order dessert, it's good, right? Let's say you order a whole cheesecake, not just one piece, but a whole cheesecake. That first bite is really good. Second one too, and you can keep going. But at some point, you've had enough cheesecake. It doesn't turn you on anymore. So I've had a good life. I've had a good life. It takes a lot now for me to I don't know where I'm going with this. It once you have enough knowledge about something, the mystery of it all disappears and everything, I don't know how else to say it. I mean, like the first time you go on vacation is exciting. The 50th time you go on vacation is, okay, well, it's not that exciting. It's like, okay, it's a new place to go, but there's the airport, and then there's this, and then there's that, and I don't feel like leaving the house, and why do I have to, blah blah blah, like you've lived, you've lived enough. It's like I've had my fill. I'm good right now. So it just, last 35 days for level 1, very underconfident, keep forgetting things. That's normal. 65-70% on end of curriculum. Hardest topics for me are duration of bonds, midsection of FSA, and linear regression. Well, where you're weak, what you have to work on. That's, you're there. 65-70% end of curriculum. That's pretty good. Lean into it. When you are learning something, everything seems disjointed. When you start the review process, that's important because that's where you start to consolidate all that knowledge. And as you're consolidating it, you're realizing that this is connected to this, and this in quant works over here. I see. And, it all starts to come together. I don't know that I'd give up a month before an exam. A week before an exam, I'd think, okay, I got a problem here if I'm thinking this way. But a month before, I would keep going. More than a month, right? It's only October 6th. How much valuation do you determine if a company is overvalued? Not much. Not much. A lot of times I can tell whether I'm interested in a company by going through the 10K and reading it. And if a good story's not coming into my head, I'm not that interested. If it is, then I think relative valuation is a lot better than absolute. Relative valuation is just saying, well, what multiples are these things trading at? What's the industry trading at? What are peers trading at? I think that's a lot better or a lot quicker than absolute valuation. Do you rely on the market being efficient? No, I'd rather it not be efficient. Choosing the biggest companies in their respective sector with good story to invest in. Yeah, that's one thing. Yeah. What car do you own? I don't have a car. I have a truck. I have an F-150. Why'd you skip my question? What question? What are the risks associated with BTB? Well, the risks associated with any REIT. They rely on tenants for their income. What if they lose a significant tenant? They are diversifying more into industrial, which is a good thing, but they do have office exposure, which is not really a great thing. However, they got a good tenant base, right? So their payout as a percentage of funds from operations about 60%, which is reasonable. They're not really going anywhere in terms of growth. They're not going up, but they're not going down. They're not getting bigger, but they're not getting smaller. They're not a big winner. They don't have options, but what they have is a dividend that is a return of capital. So it's very tax efficient. It's 8 point something percent, and you get paid just. It's a nice little thing to throw in the corner of your portfolio that's better than cash. So if you have a 10% allocation of cash and you don't know what to do, I think BTB is nice just because it pays more than cash. And I really don't, if it's paying me the cash rate, 8 point something percent, as far as a growth component in my portfolio, not a bit. It's income. It's pure income and non-taxable income if you are in a taxable account. This is a nice pure just return of capital. It lowers, everything is smuggled in as a capital gain at that point, right? But I didn't see that question before, so I didn't skip it. I didn't see it asked before. Yeah, I didn't see it. Applied level is a game changer, but I think if you consider granting a special price for students in specific countries with high US local currency exchange rate will be a great gesture from you, and that will be gamed to no end. That would be gamed to no end because somebody in the US would just simply say, I'm in this country. How's our system going to catch that? Now we can say, well, your DNS doesn't say you're there. Oh, I'm using a VPN. I'm in this country. I'm a liar. And what do we do at that point? That would be gamed to no end. And then suddenly 100% of my subscribers would be in this low cost country to the point where I couldn't even cover the cost, the ongoing cost of getting this done. And it would be over for everyone. Tragedy of the commons, right? Can't do it. I know that you're in a country perhaps that has not a very good exchange rate in that sense, but there's limitations on what I can do. My costs are not in your country. My costs are in the U.S., so I have to pay American costs. If my costs were in your country, well, then suddenly that makes a different. That results in something different. But if I did that, I would be gamed to no end. Where did we leave off? Which industries in consumer staples, in consumer sector, staples or discretionary, would you consider to be dying and wouldn't touch with a 10-foot pole? That's a good question. I think, well, no, that's in tech. Consumer discretionary. Good question. I don't know. I haven't really thought it through. I haven't really thought it through. Yeah, that's a good question. I don't know. Is it safe? Is it fair to say one mimic real estate exposure utilizing a mortgage by going on margin? Is it fair to say one mimic real estate exposure utilizing a mortgage by going on? I don't understand the question. Getting a mortgage, going on margin. I don't know. I don't know what that means. Why can't hedge funds go public, but private equity firms can? Well, I don't know that hedge funds can't go public. I don't know. Is that true? I don't know that that's true. Maybe they choose not to. I mean, I don't know that that's true. Isn't that what what's his name was going to do a little while back? He pulled his IPO. He was going to do an IPO and he pulled it. He lowered it and then just pulled it. What are some reliable news sources you regularly read, mainly for business, political? I think you got to have Wall Street Journal and Barron's. Barron's is good. For political news, it's everywhere. I don't even think you need to subscribe to something for political news. That's everywhere. Bill Ackman. There it is. Bill Ackman. Past level 3 because of you. Thanks. My request to you is to read Henry Ford's My Life and Work written. Share your views on his take on money, bankers, and business. Something from 100 years ago. I don't know that it's relevant today because the industry or the economy he was in, money, bankers, and business, was very different in 1921, 22 than it is today. So it's just a history lesson. What is your take, if any, on Aswath Damodaran's comments on interest rates? I think he is out of his wheelhouse on that one. I listened to his talking about the Fed and interest rates. You know, that the Fed doesn't lead interest rates; it follows. It's like, well, but that's the whole point of valuation, right? It's forward-looking. The market is forward-looking. It's just pricing in. The Fed is just one more variable to price in. That doesn't mean that one follows the other. I made that case before, that if we accept that, then we must accept that a company doesn't know what price to get to until somebody does a valuation. And then the company says, oh, that's the price we should be. The price follows the fundamentals. The valuation is just somebody's best guess about what the future is going to be. What was the topic of PhD? Is it possible to get your PhD thesis? All the PhD theses are online. I took patent data, 20 years of patent data, and I took the 1% in the US, the top 1% in citation, so the most highly cited patents, and I mapped them to the business cycle. And then I did an analysis of where the most significant innovations are created. The thinking is that in downturns, companies refocus, and that's usually where they invest in the next growth phase, that these things happen at the bottom of cycles, and they do not. They happen at the top. At the very top, the most significant innovations are created by far at the top, precisely when the Fed wants to shut down the economy, is where the most significant innovations have occurred. That if you let it go, do you know why it occurs at the top? Because a problem is the beginning of its own solution. It's called induced innovation, which is something an economist came up with over 100 years ago, that if you want to induce innovation, throw problems in people's way. You want cleaner air, regulate it, and you'll get innovation around the regulation. If you want lower costs, raise the cost of something, you'll get innovation around it. So right when the economy is producing inflation and prices are going up, we shut it down right at the time that history has shown that the most radical innovations happen at that time, because now we got problems to solve. How do we work our way around this scarce resource that's gone up in price, right? By leaving it high. The best cure for high prices is high prices. So the title of, I gave one talk after that one presentation, the title was First We Kill All the Central Bankers, because they kill the very environment in which, and if you map it on the Phillips curve, now the Phillips curve has inflation and unemployment, you put it in a grid and you map it, almost all, I took the top 100 of the 1%, the top 100, they almost all happened at low unemployment, high inflation. Almost all of them clustered in that group, the very scenario that central banks want to destroy. So central banks not only slow down the economy by raising rates, they slow down innovation. They slow down radical innovation, thereby hurting the economy even more. They're more dangerous to the economy than you would think. That was the PhD. And after I wrote it and after I was done, I said, I fucking hate academic research. God, I hate it. And I never did it again. Curious to know how much you were worth at 30. Got to think about where I was at 30. I don't know. I can't remember what I was doing at 30, but I went up and down and up and down and up and down. I've been in the bottom 10% 3-4 times in my life. I've been in the top 10% 3-4 times. Now I'm in the top 0.5%. So, that's the point of economies like Canada and the US. There will always be the top 10%. There will always be the bottom 10%. That does not make the system unfair. What makes it unfair is that the bottom 10% can never get out of the bottom 10%, and the top 10% will always be the top 10%. But mathematically, there will always be a top 10%. The true test of whether or not it's a fair system is, can you travel across all the deciles? And I have many times. So that's what makes it a fair system, is that whatever decile I'm in, I can go up or I can go down. If you look at the turnover in the top 10%, it's a lot. At any given time, if you look at all the Americans, all the American citizens, about 30% of them at one time in their life or another have been in the top 10%. It's not that the top 10% is only for 10%. Some 30% of the population have at one point in their lives or another been in the top 10%. So that's what makes it fair. How do you handle a heated confrontation? I hate confrontation. I really do. MMA or by being articulate. Depends on what the other side is doing. I don't back down. That's my problem. And I know as I get older, that's going to be more and more challenging to do, but I don't back down. I don't back down. I wish I had it in me to do it, to say, okay, look, I don't back down. I step in. Somebody takes a step towards me, I take a step towards them. I don't care. I'm the worst thing you could do is step backwards. Oftentimes when you step forwards at my size, there's a message that comes with that I am unconcerned with what you've just done. whether we throw down or not, I don't know if I'd be concerned or not, but I've rarely had to go much further than that. Rarely had to go much further than that, because you have to assess, what are your chances? You can see when I'm in front of you, you can see my size. I'm big enough, and I'm confident enough, and I do have, I have some experience with this stuff, that you have to assess what are your chances of getting away unscathed, right? For the most part, I try to avoid confrontation as much as possible. And usually if there's confrontation, it's because the other person has escalated to a point that I just, I'm not backing down. I can't understand the next line. Looks like it's Hindi. Do you have a gut feel on who you think is going to win the U.S. election? Ask me with Biden, it was a clear winner was Trump. Now, I don't know. I don't know. Trump and Vance seem to be floundering. Does abdicating responsibility work? It seems to work for politicians. Well, it works until it doesn't, right? What's a decent yield for a dividend stock portfolio? 2 to 3%, I think, is a good combination of value and growth. Once you start getting the 4.5, 5, you're giving up growth and getting more value. Any thoughts on the momentum trade on Chinese and Hong Kong markets? Well, I think it continues. It's going to be a while before we know whether or not the fiscal and the monetary actually do have an effect. But until then, psychology will allow the market to run. I think it continues. It's funny to see many U.S. hedge funds who said never touch China have jumped back in. Well, because the situation has changed, right? You don't touch China, but you have a government that throws trillions of yuan at it, saying we'll throw trillions more. That's a different situation. Things have changed. There's new information on the ground, so they're just going with new information, which you're free to change your mind as the facts change, right? What you don't want to do is not change your mind as the facts change and say, nope, I said I would never do that. I can never do it ever again. I'm in a prison of my own making. It's given what I know, here's what I would do. Well, what if what you know changes? Well, then I'm willing to change my mind on certain things. I've been long Oxy for a very long time, and I've made a lot of money on Oxy, but now I think it's time to be a little more cautious. Same with GM. I was bullish on GM for a long time. Now, from an earnings perspective and growth perspective, I think it's time to be cautious, but I still think they'll buy back their own shares, but I don't think I'm that willing to sell puts as aggressively as I did the last few times it went down. It's like, let's hold off. I changed my mind. Where are we on time? 2:36. I'm going to wrap up here soon. Let's get through a few more. As a retail investor, you were active in equities, fixed income, and FX. Yep. Why did you decide to explore other markets other than equities? Diversification. Why not stick to equities given the size of the equities market? Diversification. Right. Diversification. Do you enjoy Western films? Well, Westerns? If so, what's your favorite one? Favorite Western? I'd have to say My Name Is, or They Call Me Nobody. Is it My Name Is Nobody or They Call Me Nobody? I think that probably has to be one of my favorites. That's a good one. What would be the best option strategy to be long an undervalued stock with the potential to be a multi-bagger in the long run? Buying in the money calls with very long-term expiration? Sure. Anything that gives you delta is if you think it's a multi-bagger in the long run. Sure. You would think that if markets were really worried about Iran and Israel, yields in the US dollar would tank. No. If the markets were really worried about Iran and Israel, yields would go down, bond prices would go up, the US dollar would strengthen. The fact that they've done the opposite tells me, okay, so yields, when we say yields tanked, it means yields went up. I mean, prices dropped, right? The US dollar is right now nothing. US dollar right now is nothing. Futures are slightly negative. Gold is negative, slightly down $2. Nothing exciting to talk about here. Energy is still down. Let's go to treasuries. ZB is positive, 0.2. The December ZB, 122 and 7/64, 122.07. 732s, sorry, 732s, 1464s. Can't tell much this time of night, not till tomorrow. Do investing in bond indices work every time? What does that mean? Work every time? Every time? What do you mean work every? I don't understand what that means. Does it work every time? What do you mean by work, and what do you mean by every time? Bad and good economic cycles. So a bond, you can, if it's like a U.S. Treasury, you'll never lose. The value of the bond may fluctuate over time, but if you hold all bonds to maturity, you get whatever yield you originally bought it at, right? So you can't lose in a bond. So if that's what you mean by work, sure. How many staff do you have working on your applied series business, and do you plan on adding more people? I would add 10 people if they showed up tomorrow. I would add another 10 if they showed up tomorrow, without hesitation. There's so much work to do. Have you ever heard of a school called London School of Economics? LSE? Have I ever heard of it? Wondering what's your thought on this school. Again, what do you mean by what's my thought? It's a good school. Well known, good pedigree, but I don't. Sachs is generally really annoying. Freeburg is the only one I like these days. I think you're right on that. I think if they keep going with this politics stuff, they will wear out their audience. I couldn't even get through half of it today, and I just, stop, please stop. I looked at the markers along the bottom for the chapter markers. I thought, okay, no, I'm out. So if it's going to be political all the time, I'm out. If it's just going to be, Democrats suck, no Republicans suck on every topic, I'm done. I don't need that. So they're in danger. We don't listen to them because it's these four people. We listen to them because they're four venture capitalists who have a window on a part of an economy we don't have, right? That are well connected enough that can bring on interesting guests. But as far as political opinions, they're no better at any political opinion than the person down the street. I can just listen to anybody going on about politics. They really, they risk, I think, losing a big part of their market if they stay on this politics stuff. Doesn't diet relieve pain? People say getting older is getting constant body pains. I don't have constant body pains. How would you estimate fair value for an insurance company? Well, it's insurance company's balance sheet is a lot of financial assets, right? And then it has, of course, the franchise of how well it underwrites. And there are a couple of measures that you can use. I forget what they are because I don't deal with insurance companies, but there are a couple of measures in terms of how efficient they are at getting business. And I forget the ratios that are used, but there are a couple of ratios for that. Are there any non-profitable companies that you are looking into with a bullish outlook in the near future? Unprofitable? It's usually not my thing. So no. Oxy puts. Last month I sold 52 calls on Oxy after assignment to lower the delta, but now it looks like they will be called away. So at this point, should I increase delta by selling puts? Don't second guess the market. Just let it be called away. You don't have to make money the same way you lose money. It doesn't mean Oxy is gone, just means they get called away. You do something else after the fact. But layering on strategy on top of strategy, trying to second guess the market is a recipe for disaster. What do you think about the current state of the Canadian housing market? Undersupplied. Undersupplied, except outside of, like Toronto condo area, massively oversupplied. Again, these big questions of what do you think about this really big topic? If you could be a little bit more specific when you ask me what I think about something, because this to me seems like, well, what do you think about space? What do I think about it? What specifically, right? Because you could go on for an hour about that, but what specifically? Will you be voting in the 25? No, because I'm not a citizen. So, I'm not a resident. Could higher cocoa prices hurt Hershey and Mondelez? Not really. Chocolate is a inexpensive luxury, right? So prices have been going up for a long time. It really doesn't hurt chocolate consumption because chocolate is seen as a luxury item, but an inexpensive luxury. So even if it goes 20, 30% higher, it's still seen as an inexpensive luxury. So no, I don't think that higher cocoa prices on their own would hurt those companies. Do you think all the growth of AI and assets is already priced in to XLU? Nope. It's up 26% year to date. Isn't that beautiful? For utilities, right? You don't have to go chasing high beta stocks. You can get any utilities. No, I don't think that story's done. Now, you have to look at utilities on a total return basis, not just the price return. Keep in mind, it's got a beautiful dividend yield and a growing dividend. So as the price goes up, the yield will be fairly constant because your dividend size will increase as well. You can take the dividend and you reinvest. Take the dividend and reinvest. That's a total return, right? Not just price return. So on a total return basis, it's up by more because you have to include the dividend yield from the beginning of the year. So 3/4 of whatever the dividend yield is, you have to include that in. And then you would have had, if you reinvested, some return on the dividend yield. Active investors always underperform the market. What is the reasoning beyond managing your own money and not investing passively? Diversification of strategy is that I don't want all my money under the direction of my belief about the market. I need some people, because it's significant enough, I need some people who are managing it who believe something different than me. Diversification in that sense. If it was all passive, I would have to choose the passive ones. I want it outside of my control so that I don't step in and do that. Diversification, right? For a growth-oriented portfolio, what's an optimal range of stocks to own? Well, optimal. I don't know that there is anything, such a thing as optimal. Optimal, I think, would be how many can you pay attention to? 40, too many. 5, too few. 10 to 15. Can you stay on top of 10 to 15? Challenging. 8 to 10, probably better. 30, stupid. If you're going to be in 30, you may as well buy an ETF that has that tracks part of the of what you're looking at, right? So optimal is what's optimal for you. Thoughts about European economies? Again, we mostly have unsustainable welfare states and lagging economy. Again, that's such a big question. I don't have an answer for it because it's just such a big question, right? You could have a whole 3-hour seminar on just that itself. So thoughts? I agree with you. That would be my thought. I need something specific because it's just too big. Do you agree with Diamond on the thought that we're going into a higher inflationary economy? No. No. Was China already discussed? Yeah, I'm curious what the potential upside run will go to. Who knows? All I can say is there's probably a bias to go higher. How higher? How much longer? No idea. You on doing an MBA after CFA, given the jobs market? I am far removed from the job market, so I don't know. Also, I don't. It depends on the school. There are some schools where doing an MBA probably not worth it. It's probably not worth it based on its view in the marketplace and of the students you'd be doing the MBA with. Talking Stanford, yeah, beyond its view in the marketplace, those are the people you want to know. Tri-County Community College, no, because they're not people you want to know, not people that are really going on to do anything, and who recruits from there anyways, right? So before you say, is it worth doing an MBA, who recruits from that school? And is it known for anything? Is it a tier 1, tier 2 school? Are the people who graduate from there people that you think are going to be worth knowing? So there's more to think about than just the 3 letters you add behind your name. You mentioned a few times for our level 1 candidates that you have trouble with derivatives, should think of them as time value of money. That's all they are. What exactly do you mean by that? That's what I mean by it. What's a forward price? It's the spot price brought to the future. How much does it cost to borrow money, buy the underlying, and bring it to the future? What's the value of the loan that you owe? Well, that's a future value. You learned that in quant. That's nothing more than time value of money. There's a futures price. If you borrow $100 at 5%, how much do you owe in a year? $105. There's a futures price. You just calculated the forward price of a $100 stock if the risk-free rate were 5%. Look what you've done. How do you calculate the forward price? I just showed you. That's it. That's it. That's it, right? It's so easy. That's it. It is nothing more than time value of money. All of it is. Could we do market outlook course in the applied level? I don't understand how to put those numbers we look at every time. Oh, it's right on YouTube, Understanding the Market Outlook. There's a video right on my YouTube channel for that. Do you have any tips on how to drum up and sustain motivation and discipline? And beyond that, is it possible to cultivate ambition when you don't have much to begin with? Well, you're asking the question. So it's not as if you don't have ambition. You're asking the question, so you clearly have something there. I guess I would have to get there's things like this require so many follow-up questions. This is sort of why therapists ask a lot of questions, because you go see a therapist and you say blah, 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 and the therapist will ask questions. So here's what a therapist would say. What do you mean when you say ambition? What does that mean to you? I would have to first make sure that I understand your vocabulary and what you mean when you say a certain word, because I know what the definition of ambition is, but it may have a different meaning to me than it does to you, even though we both recognize the word ambition. So I would probably, follow up by saying, well, what do you mean by ambition? And you would say what you meant by it. And I would say, why is that something you want? And then you would tell me why it's something you want. And in just asking you questions, you would discover yourself. That's the whole point of therapy, is the therapist doesn't have the answers. You have the answers. What the therapist tries to do is to get you to frame the problem correctly, so that you first of all understand your own problem, and in doing that, you will see your own solution. So it's not as if they're consultants that have all the answers. They're guides that help you organize your thinking in asking probing questions that force you to really be clear about what problem you think you have and why you think you need a solution and why you think something is important. Because once you discover why you think something is important, you've solved the problem. It is now important, and you know why it's important. And if I give you a why, you will live through any how to get it, right? What do you mean when you say ambition? Why is ambition important to you? Why? And if you say to make money, why is money important to you? You got to get to a root cause where there is no more why. then you'll have your answer. Working in servicing assets. Will CFAs help me break into corporate finance? No. With an economic, no. Well, you don't need CFA for corporate finance. CFA is two big sides to it: is asset management and security analysis. You don't need it for, it's overkill, a significant overkill for corporate finance. Have you given any thought about why Costco's moat cannot be disrupted? I visit Sam's Club with my friend, and sometimes, and it's quite good, but not as awesome as Costco. Can't put my finger on it. Costco focuses on having a low number of SKUs with high turnover. So what they'll do is they'll go to a supplier of a product, or more than likely the supplier will come to them and they'll pitch an idea, and Costco will determine whether or not it has enough value. We got two of this and something, and say, well, it needs to have three. It needs to be overwhelming. It needs to have three. Their maximum markups are 14 to 15%. So no matter what you buy from Costco, you're not paying more than 14 or 15% more than what they paid, which is convenient. I mean, that's the price of convenience. You got it all the way here. You put it on a shelf. I take it down. If I tried to get it myself, it would cost me more, right? And so it's hard to beat that value proposition. Very difficult to beat it. Yeah, the loyalty of the Costco customer is off the charts. Costco's always my first stop for everything. What I can't get at Costco, I go somewhere else. Always my first stop. That's a big deal. What's your strategy for TLT? Own it long and hold. Patience. I think there's about 1 hour delay in question to answer. I don't know if it's an hour delay. Your question shows up. I'm just scrolling down the chat and I'm answering them in the order that they show up. If you had 1 million CAD with your knowledge in 20s, would you use it to buy a house, or would you use it to invest and rent? Today, if I were in my 20s today, well, now I would have to ask you why your focus on real estate. Like, why do you have this focus on real estate? Why is it that if you don't buy a house, oh, I see. I thought you'd invest and rent the house out. Oh, I see. Would I buy a house or would I invest it and rent? I'm in my 20s. Am I mobile? Do I think that I'm going to be in one city for the next 20, 30 years? I'd buy a house. Am I mobile? I wouldn't buy a house. Let's say you only made 12,000 annually. I'm not talking about in terms of utility, but talking about financially, when you should buy something. When you should buy something like an iPhone. Like some people say you should buy when you money for 10 of these, or when you, I don't understand that. You make 12,000, you want to buy a $1,000 phone. I would say that, I would say that's not a wise use of your money at all. You're buying an iPhone. I guarantee you in 3 years, Apple will slow that shit down. You have no choice but to accept their upgrades, and they will upgrade your phone. And when they feel that you should be upgrading your phone, they will slow your phone down. They are evil that way. They will slow that shit down and force you to buy another one. I don't think that you could be spending 10% of your income every 3 years on a new iPhone. What do you want an iPhone for? I guess that would be the question. What do you want an iPhone for? And if it's, well, I can't be seen with anything but, then you're not buying it for yourself. You're buying it for other people to see you with it. That's a waste of money. That would be a waste of money. Hedge funds can go public in some countries. Yeah. What factor drove you into hating academic research? 99% of academic research is bullshit and has no impact. I'd say 50% of academic research is flawed. Wrong methodology, 50% the violations of assumptions, the lack of rigor in the analysis, the samples that are being used are not reflective of the population, making it's just you have some people writing these papers who make fundamental quantitative mistakes in their methodology. I'd say half of them are just blatantly wrong. The academy cares more about rigor than truth. And God forbid your truth does not match the dominant narrative in the literature. You have to be peer reviewed. And if you're saying you're wrong and you're wrong and you're wrong, guess who's going to be reviewing you? Those people. That's how the editor is going to do it. It's going to be looking at what you're doing and you're wrong and you're wrong. Going to be looking at your references. You're referencing these people. Those are your reviewers. You're not getting published. You're not getting it. You got to tip your hat to the right people. You got to cite the right people. God forbid you wrote a paper about topic X and you didn't cite the more prolific author, because the editor is going to send it to him to review. And he's going to say, you're writing about this topic and you're not citing me? Fuck you. Fail. Not fail, but, it would be reject. It would just be a reject. It wouldn't be a rewrite, a revise and resubmit. It wouldn't be an R&R. You're just rejected. You're just rejected. So you got to be political. You got to tip your hat to the right people. You got to cite the right people. You got to put a brick in the wall and say, well, I'm basing this off this person's research. Here's my little brick in the wall, but this is the guy. This is the guy over here. I'm just doing it, fuck that. I don't have the patience for that. No. I didn't like it. I didn't like it one bit. Plus, it was brutally boring. And it wasn't real. None of it was real. The real world was calling me every day through the quotes on the screen. And I'm looking at the real world and I'm looking at the academic research and the literature and the articles and the abstracts, and I'm looking at the real world and it's like, what the fuck am I doing with this shit? And that was the end of it. It just wasn't real. It wasn't real. I actually pity most academics in their small little lives, in their small little worlds, thinking that they're doing something, writing, spending 6 months of their life writing an article that gets published that no one ever reads. No one ever reads this shit. 95% of the stuff that's published, no one ever reads it. No one ever cites it. It has zero impact. Nothing. Is that a life you want to live? An empty life like that? Wasn't for me. Regarding my other questions, which you found not so interesting, ideas of Henry Ford and Book My Life and are still relevant, probably more relevant. Possible black swan event. How do you deal with this? You don't until it shows up. You can't say how do you deal with a black swan event until it shows up. You don't know. All you can do is have a watch list of stocks that you would go shopping for if the day was red. 5-6 months is enough for level 2. Yes, it is. Since now you are price insensitive, but I take it you will only see buying things in terms of utility or see the price. No, I only buy things that are useful. I don't waste money on stuff. If it's not useful, I won't buy it. And if it is useful, it's something that has utilitarian value. I want the best, but I'm not going to buy stuff I don't need just to buy stuff I don't need. I see no reason to buy certain things just so other people can know that I can afford them. What's the point? I don't wear a watch. I don't wear any jewelry. I don't have a $10,000 Rolex, or I guess that's the cheap Rolex, right? I don't have, $20,000, $30,000 watches. What's the point? What's the point? Quick technical question. With an increase in tax rates, can we expect a more or less volatile market? I don't know. You tell me. I don't know. Why would you expect it to be more volatile? Why would you expect it to be less volatile? You tell me what your thesis is, and then I can critique it. But just to say, would we expect more or less? I don't know. Why would my follow-ups would be, why would you expect it to be more, or why would you expect it to be less? Right? That's called Bayesian thinking, updating your thought model. Yep. As an employer, what do you look for an employee who deserves raise, promotion, bonuses? Performance. It's just no, there's nothing else. Performance. That's the only thing. You're thinking Mr. Nobody. That could be it. Yeah. All right. Let's just jump to the bottom and we'll answer one more and then we'll be done. Let's see. I think I've answered most of these in one way or another. So let's call it. That would be it. Now, next week there is no live because I'll be flying back. I leave here at 10 a.m., which is noon New York time, which means I don't land in Toronto until 5 p.m. Then I got to get to where my truck is. Then I got to drive home, which is an hour. Well, it would be an hour away, but it's Toronto, so who the hell knows how long it's going to take me to get out of there? It could take me 6 hours. I don't know. That's that's the chance you take. So I will not. There's no way I'll be ready for 7:15. So we'll cancel the live for next Monday, but the market outlook will be posted on Saturday evening, and that's it. I'm going to log off now, and it's 8:22. Maybe it's time for me to have something to eat. I only eat once today. And that's it. All right. I'll see you in 2 weeks.